kind of happened in 2002, if you remember. As we kind of came out of .com, the market had to disassociate itself with a lot of the garbage from the prior cycle.
I got to say, Chris, right now the headline is that Roku and Carvana are garbage, according to Chris Verone of Strategas. I don't know that that's necessarily the headline that you necessarily want, or maybe it is, but there is this issue that right now there are a lot of people who think that there's so much pessimism, who hear all the bearish talk on this program, elsewhere, and are sick of it. And you're seeing that come into the commentary. You're seeing that in the options market, where you're seeing actually people putting on much less protection against the market dropping another 10%. What do you make of that?
You know, it's a great question, Lisa, and I'm struck by a couple things. Number one, I think back to late 2008 into 2009. I think that feeling of capitulation was very different than this. I mean, I can remember not wanting to turn the screens on in the morning. I don't think we're quite there yet today. The second thing I would just note is be careful that, or at least distinguish between what people say they're doing with their money and what they're actually doing with their money. And I still think the gap between those two things is quite wide here. The flows, for example, are still pretty aggressive into both equities and bonds. I'm not sure that describes that cathartic or capitulative moment. We do have good seasonal support here for the next, call it 90 days. I want to be mindful of that. We have essentially oscillated between 3,600 and 3,800 for the better part of the last 6 weeks. I could get you to, let's call it 3,950, 4,000 on S&P, but then we have to deal with the very inconvenient fact that this is still a downtrend. And I think stocks rallying into downtrends are ultimately things that you want to fade down the road. So
there's a breaking point at some point that a lot of people foresee, yourself, Mike Wilson, and you did correctly call the yen going or weakening to 150 per dollar. How much is that going to be a potential catalyst? This question of what John called a bonfire of central bank foreign exchange reserves, how much is that going to be really the trigger?
Well, the language that we've used is just very simply, the market is back in charge here. And I think we saw that in the UK over the last several weeks. I suspect we're going to learn that here in Japan over the next number of months. I mean, the story is, what, $30 billion of intervention? I think that's what the FT reports on Friday. So that's a 50% increase from the $20 billion of intervention that we saw, I think, on September 22nd. After the September intervention, it took 14 trading days for yen to make a new low. So that's kind of our benchmark here. Let's see where we stand in 2 weeks. Are we talking about 152 yen again? Or are we talking about 135 yen? I think that's going to be how we judge whether or not this is successful. Because when I see German 10-year yields at 250 and U.S. 10s at 420, and I see Japanese 10s at 26 basis points or 25 basis points, there's a clear outlier here, and I think that's an unsustainable path for the BOJ to remain on.
You see the gap lower on that chart, Bramo? There's just smoke coming off the bottom of it. What is it, about $40 billion worth now? To Chris's point.
Love your comment.
Just ridiculous. I want to look at sterling as well, 113.18. Latest reporting from the team in the UK, Tom, that Rishi Sunak, the former Chancellor, is getting the public endorsements, and we've been tracking them here at Bloomberg News. We've verified public statements from 179 Tory MPs, so that's more than half of the Tory MPs now, Tom.
And this goes to 9 a.m. this morning, our time. What happens at 9 a.m., John?
Perhaps we get a Prime Minister.
They announce, they anoint the Queen.
Rishi Sunak, maybe. Well, you've got to change the language there, Tom.
Excuse me.
We've got the King as well, sure.
Yes, thank you.
Big changes, Chris. I don't want to linger on it too long. I think this market wants to move on and move on quickly. You mentioned that maybe we've had one scalp in Liz Truss. Where does the next one come from? Chris, can you elaborate on that a little bit more? Is that a change of leadership at the BOJ? That's set to take place anyway. What is it?
Well, I think that's a good place to start. We wrote something to the effect in, I think, February or March that the BOJ was going to have its 1992 BOE type event. And I didn't also think that the BOE would have another BOE 92 type event, but of course that's kind of what happened here over the last several weeks. So I do think ultimately this is heading towards some crescendo, and I think Japan is kind of ground zero for that. Now, also keep in mind, Tom, CNH this morning is at 730, 731, right? So the stresses that we've seen in the Chinese currency haven't abated here either. So I still have yen at 150, and I have Chinese at 730. I'm not sure that's the greatest environment for macro risk.
What is the technicals of the 10-year real yield now? We exploded out to 181. I'd call that catharsis. You come back, but we set, Chris Verone, above that 160 level. What's that chart look like?
Well, this is a little bit of a pet peeve, that this idea that real yields are actually positive. I guess theoretically they are positive if you're taking
Right, but if you look at the 2 year
10-year
side,
yield versus 10-year break-evens,
yeah.
right? But if we look at like the actual policy rate, I mean, what the Fed funds rate is 3.25 and inflation's 8. So I think for all intents and purposes, for real people, the real interest rate is actually still quite negative. So I think there's more work to do here before the Fed really believes that short rates are offering a positive real yield.
Right. It was Chris Verone, our Fed speaker today.
He's our Fed whisperer.
He's our whisperer today.
He is our Fed whisperer.
It was very good.
Hardly.
Hey, Chris, thank you. Great call, buddy. You know
Thank you.
that. Just
Killer.
fantastic.
Thank you.
Chris Verone there at Strategas. A bad company. Is that right? A bad
That is
company.
right. Yeah, there's a lot of this going on. People are buying intellectual value. When you can buy Jason Trennert and Chris Verone and the rest of them, that's a good thing.
That's very cool.
That's
Do you want to
what
go back to that
this is
UK
about.
story? More than half of the Tory MPs throwing their name into the hat for Rishi Sunak, Tom.
Yeah, what I see, and Kitchuk's nailed this, austerity. Whatever happens, let's say it's Prime Minister Sunak, we have to assume some form of fiscal austerity. And that's all there is to it. And that's going to be, maybe that's a word for the fourth quarter worldwide.
We're doing all of that again. Austerity. So that's the question, isn't it, Tom? Are we going from this inflationary boom to a disinflationary bust?
We are,
in the UK and
we are
beyond?
pulling away from the fiscal largesse of the pandemic. And you can debate this, that, and that of the pandemic. But let's be honest, it was a fiscal boom, right? And we're pulling back. And that gets you to something, frankly, a lot of conservatives, nation to nation, including in the United Kingdom, they're comfortable with it. They
Lisa?
love austerity.
Well, here's a problem, and you asked Chris Verone the right question, which is the next head to roll, right? Where do the bond vigilantes, do the market vigilantes train their focus, and what does that mean in terms of global fiscal spending? If there is this feeling of pullback, you might not still get that disinflation for quite a while because of the physical goods, the need for them, and the fact that we haven't necessarily invested for many years in them. So how do you sort of get that adjustment period to a disinflation that can right-size an economy that's not going to get the fiscal spending boost?
Elisa, I'm struggling to adjust to the reality of right now, 2022. If you told me 12 months ago we'd have 46 handles on PMIs out of Europe, and the same week we'd be hiking 75 basis points, I'd have walked out of the room laughing.
Right.
What is this show? It's ridiculous.
Well, you might still walk out of the room laughing.
I'm going to walk out of the room laughing. What is this show? It's ridiculous. Anyway, go on, yeah.
But no, I mean, this is a good point, right? The scenario has changed where we are getting that weakness and it isn't enough. And it's raising this concern about what, the step down, right?
The step
about
down.
how you get to some new level of appropriate...
Can we get the tea cam
Yeah,
up?
seriously, I think that we need the TK cam. Well, how do you adjust to needing rates to be high for long enough? Some papers say 2 to 4 years for it to actually have maximum effective
The step
inflation.
down, Tom. The step
And still
down.
manage
I just
to-
did a fancy
economy.
chart of the Chris Verone vector, which is yen. When do you get to 160?
You mean you're not listening to anything Lisa and I've
God,
got
no.
to say?
January,
Cool.
Wanna get
January.
stepped down.
So pleased I came back.
We're moving so fast, John. January of next year, you get to 160.
November next week. November
Yeah.
next week.
3 months,
Where did that come
160
from?
yen. Is that feasible?
It's good to be back, Tom.
It's great to have you.
Isn't it great? He's always listening. It's just awesome. Dollar yen,
Step down.
149.37.
The Yankees had a step down.
Okay, so in New York, you hate the Phillies, I get it, but you hate the Astros more.
Yes, absolutely.
Okay, so
The
Yankees support Phillies in the World Series.
The Yankees played baseball last night. Their biggest failure, they're undisciplined. Their home run derby every at bat. No
Okay.
one's.
They don't like singles.
They don't like signals. They got to play baseball.
Do you like my
know.
baseball ball chat, you know? I practiced that for you this morning.
You did. I know.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means policies that are not market-friendly. In the UK, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to pull out of the race to become the next prime minister. Rishi Sunak has picked up public support from more than half of the Conservative Party members of Parliament. Mordaunt needs the back of at least 100 lawmakers to go forward to the final ballot. And in baseball, it will be Houston versus Philadelphia in the World Series. The Astros wrapped up a 4-game sweep of the New York Yankees with a 6-5 win to take the American League. Philadelphia beat San Diego 4-3 to win the National League title 4-1. Game 1 of the World Series Friday night in Houston. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have
I've been in and seen it.
lots of Bloombergs, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg, lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
You do not get stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
What you see is growth below trend in 23, GDP growth below trend, policy tightening that gets the rate up next year between 4.5 and 5%. The one policy tightening that raises and then holds, because we have to keep the rate at a tightening level in order to fully reestablish price stability.
Mary Daly, the Federal Reserve Bank of San Francisco president, live from New York City this morning. Good morning. Here's the price action. Equities continuing the gains on the S&P 500 briefly. Equity futures on the S&P 500 up by a little more than 1/10%. Yields coming back down again on a 10-year, down by 4 basis points. 417.50 on a 10-year. Euro dollar negative 0.4%. A weaker euro, much stronger dollar through G10. Euro dollar 98.21. For anyone following the UK Conservative Party leadership race, the race to be the next Prime Minister, you have a 100 MP threshold, a 100 vote threshold to get a nomination, Tom. We understand that more than half of the Conservative MPs have publicly stated they're supporting Rishi Sunak. Penny Mordaunt, the other one in the race for this, that MP, Tom. The campaign team issuing a statement on the status of support. They have more than 90 supporters, so I believe we get an announcement around about 2 p.m. local time, so 9 a.m.
To be clear, there's no election here. So what happens after they decide there's only Sunak?
Well, let's do it piece by piece. If it is only Sunak, he becomes the Prime Minister. That is it.
Does he come in and they exit
Boris
Boris Johnson
with a sword
out
or
of the
something?
room?
Well, Boris has already gone, hasn't he?
Yeah, I guess so. Lisa and I were here doing this on
I'm sure it was
Thursday
great.
and Friday, and
Sounds like it was awesome.
we needed you. We needed you here, John, because it is foreign, to say the least. The general election could still be a year out or whatever.
It could be.
Okay.
It depends when the Prime Minister calls it.
We're going to swing back to China right now. Peter Trubowitz with us, professor of international relations at the London School of Economics. Peter, the advantage we have here is your work at LBJ at Texas. What is the symbolism that this is the only issue the Republican and Democrat parties share in common in Washington? Frame what we observe this weekend for a unified Washington as they confront a third-term Xi.
Morning, Tom. Well, I would say that for Washington, for Republicans and Democrats, what they saw on display in Beijing over the weekend will only reinforce the view that China is a force to be that the U.S. is going to have to contend with going forward. I mean, it was a very impressive, carefully choreographed display of Xi's power at the 20th Party Congress. But I think it's more likely to fuel, insecurity, security competition in the region. One reason is that national security replaced the economy as the dominant theme in the run-up to this weekend in Xi's report to party members who were gathered in Beijing. And it's no accident, I think, that Xi held back today's latest report on China's lackluster third quarter economic performance, the data, until the Party Congress wrapped up. And so what they saw on display was Xi consolidating his hold on power. And the belief is that Xi is, the kind of underlying premise is that Xi is interested in pushing China's ambitions in the region and expanding power, if only to compensate for the erosion, the slowdown in economic growth in China.
Peter, what does this mean about Taiwan?
Well, Xi was actually very careful, I think, on Taiwan. On the one hand, he announced or, made a reference to the fact that if push came to shove, they would use force there. On the other hand, there was a kind of olive branch to Taiwan, trying to integrate Taiwan into the larger Chinese economy. But I think the big story kind of locally over the weekend there was what was happening at exactly the moment that Xi was strengthening his grip on power at home. Japan and Australia announced that they were deepening defense cooperation. This happened on Saturday to counter Xi Jinping's growing preoccupation with power and influence in the region. Yeah. And it's significant because it actually follows on an announcement, a Japanese proposal to develop a counterstrike capability capable of attacking an enemy's command and control systems and military bases in the region. That is a big departure for Japan. If that becomes policy, most people think it will become policy in December. And so it's just it's pushing the region more and more into a kind of insecurity dilemma.
Peter, if you were advising some of the big U.S. banks or a multinational in the U.S. trying to capture some of the business in the world's second biggest economy, what would you tell them in terms of how big of a sea change this particular meeting, this particular anointment for a third term of Xi Jinping, really how important it was?
I think it's significant. I mean, I think he really kind of reinforced his commitment to the state over markets. And, you know, and I think for businesses, it will reinforce the need, desire to hedge their bets going forward, to look for other locations and so forth for investment. And I think the kind of general reaction of the markets this morning, I think that you were reporting on earlier, kind of points in that direction. So, as I say to people, to my students, you know, when it comes to East Asia, it's time to buckle up, because a stronger Xi Jinping at home means greater insecurity and tension in the region.
Peter, I just want to pick up on something you said. Why does he care about the data if it's about the state over markets? Because really that data is not just for domestic consumption, it's for international consumption. Why does he still care about the economic data?
I think it's just that we're talking about an event that is so carefully choreographed, the Party Congress, that to have that kind of come out, I think it was supposed to be released a week ago. So during the Party Congress, or at the beginning of the Party Congress, might have been unsettling for some who have access to that information, even if most Chinese would not really have access to it unless they were, provided it. So I think it was kind of off note for where he wanted to take the Party Congress.
Peter, wonderful to hear from you. What a time.
Good to
in
be
history,
with you, John.
Peter Trubowitz, thank you, sir, of the London School of Economics. Lisa, you wonder how much he's going to care about the data in quarters still to come.
Yeah.
Do we go back to that old world where it gets really, really difficult to understand what's actually happening in that economy?
Especially if he doesn't care about foreign investment, if he doesn't care about foreign companies, if he basically is saying better to keep the business here, then to that point, will we see it cease entirely?
We spent years, Tom, saying investors need to be allocated to the world's second largest economy. The question now is whether they want to be allocated to the world's second largest economy.
I'm not going to mention names here, but long ago and far away, a very well-respected Midwest U.S. company wandered into China through joint ventures. Boy, did I learn a lot on that class.
I'm sure they learned.
They learned a lot. I have an immense respect for people, including Apple as one example, that can do the Chinese ballet.
Did you see Tim Cook waving the checkered flag at the Formula One race yesterday?
No,
you should check out the
should
video
I
of
watch
that.
Formula One?
And
I like that you
yes,
just
you
know
should.
that I
Just check
don't
out the
get
video.
it.
Just have a look.
I will.
That's like Tom on a Monday morning. It's kind of like
Those are my cliff notes.
not into it.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment, that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling, because there's a whole city or state that is actually behind you. We had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like, just the joy that you had brought to the city was phenomenal.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I think the fixed income market is a little bit ahead of the equity market, particularly the U.S. equity market.
It's more likely that the equity market is actually calling this right than the bond market.
I would not be surprised how fragile financial markets are, that the Fed has to pause to get them back under control.
What the market is doing is pricing in an over 5% Fed funds rate. You're going to feel it on the equity side.
I think you'll get a hard landing, and the probability of the market pricing a return to the zero bound cannot be ignored.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Any more shampoo jokes, or are we done?
No, we're done, but the guest quality last week was awesome. You go away, and the guest quality is off the chart. Claudia Sahm really went after Jim Bullard.
You went after me, I heard. That's
no, I did
TK.
not.
I heard you did.
No, I did not.
In fairness, a lot of people wrote in
Very
and said that
sensitive about
product burned my hair off.
Yeah.
A lot of people were
That's
very
what
upset.
happened
Yeah.
from New York. Good morning to you. It's the price action on the S&P.
Good morning.
Futures positive, 1/3 of 1%. Keep it together, Bramo.
Please, I'm trying.
On the S&P. TK, we often start a Monday morning by saying, big week ahead. Let's just say it. Big week ahead.
Big week ahead, but there's distractions today. We are going to look at the United Kingdom here in the 9 o'clock hour, getting towards that. John will have that live in the 9 o'clock hour on TV. We'll do it on radio, but there's China. We covered that. I thought Trubowitz was great of London School of Economics. You know what? It is about the markets and what the markets are saying, and the vigilantes are out there across equities, bonds, currencies, and commodities.
Aren't we exhausted with this UK story? I sat down with my producer, Jamie, this morning. We both said, do we have to cover this morning? And apparently, I guess we do.
Well, I want to save it for later. I want to keep the momentum here in the markets. I'm looking at 1.62% real yield. Yen intervention failure. And you set up for a week here with the silence of the Fed, which is going to be interesting.
We'll save the bonfire of FX reserves for a moment. Let's talk about futures elevated by 0.4. Lisa, the rally continues in the equity market. And shout out to Mike Wilson of Morgan Stanley, who we often say has some kind of crystal ball in 2022 that none of us have, because he made this short-term tactical bullish call last week, had this big move, a weekly rally, the biggest we've seen going back to June, and it continues this morning.
And basically, Chris Verone was saying that it could continue as well. I just thought this one story that Bloomberg wrote over the weekend about how people are just sick of the gloom. They're just looking around and they're like, everyone's just so down and things aren't that bad. And so they're just pulling back. I mean, there's one quote, the narrative is getting repetitive and traders are slowly getting fed up. I mean, maybe that's part of what's going on.
S&P market cap, huge week for earnings. And John, on the 27th, when I think we get Apple, I can't remember, we get that first look at GDP. Can we remember within the recession gloom, the statistic in the Bloomberg survey for GDP first look? 2.3%.
Would you like to frame the 27th? You get earnings from Apple, You get an ECB rate decision, possibly 75 basis points, likely 75 basis points. I believe you also get the Credit Suisse strategic reorganization we've been waiting for the last couple of months for.
Yeah,
Is that enough for you?
It's a big week. I
enough?
mean,
Yeah,
but I think we're good to look at the markets as well.
I'm going to look at the markets right now. What are you looking for? You look lost.
I don't have my handkerchief here.
Your handkerchief?
I left it somewhere.
Okay.
You know, one of my people.
We'll sort that out. Sort that out. Futures right now up 0.5%. I've got no idea where he is. Futures positive on the S&P 500 by 0.5%. Yields back in again, down 6 basis points on a 10-year to 4.15. Let's call it 4.16 on a 10-year after climbing for 12 consecutive weeks. Tom, we can talk about foreign exchange briefly as well. Euro dollar 98.24, negative 0.4%. Dollar strength the story, but yen weakness, Chinese currency weakness, very much out there
Yeah,
too.
ADXY is a summary of the Pacific Rim currencies, ex-Japan. Japan's obviously idiosyncratic, almost like Turkish lira. And the bottom line is you are at support, and if you break down from here, that's a huge signal of the race to the bottom in Asia.
Bramo, massive moves in foreign exchange once again.
Yeah, this is where the bond vigilantes, or perhaps FX vigilantes, at least during this cycle. Let's talk about the week ahead. It is a massive week. In central bank rate decisions, we have the Bank of Canada decision on Wednesday, and then we have the ECB rate decision on Thursday. We can see that two-year yield bumping up against the highs that we've seen going back to the depths of the financial crisis at a time when exactly this question of how far can the ECB go in the face of weakening data. Also this week, we get U.S. economic data. We get home price data tomorrow, new home sales Wednesday, the first read on U.S. third quarter GDP, as you were mentioning, Tom, on Thursday. And then on Friday, we get the employment cost index, personal income and spending data, and University of Michigan sentiment, the latest read there. How much does this matter, not only heading into next week's Fed meeting, but also heading into the election? We have 2 weeks until the U.S. election. How much is this going to really shape the dynamic and the narrative? As we saw over the weekend, the Sunday shows, really the discussion was all about inflation and the economy, no more about some of the social issues, which gives a sense of where the focus right now among the electorate really is. And this week in earnings, tech earnings, Microsoft and Google on Tuesday, Facebook on Wednesday, and Apple and Amazon on Thursday. How much are these going to be the bellwethers, John, really driving some of the discussion going forward? So far, we've seen earnings come in okay. They've crossed largely a pretty low bar, but not as often as in the past. These are going to be the really important names, I would argue, more than a lot of what we've seen so far, John.
Hey, Lisa, thank you. Looking forward to it a little bit later this week, and looking forward to Thursday. Big day coming up this week for central banks, for data, and for earnings too. Joining us now in this bond market, Mike Schumacher, Global Head of Macro Strategy at Wells Fargo. Mike, before we talk about levels, can we just talk about ranges, intraday trading ranges on a 2-year of, say, 20 basis points on any given day without economic data? Mike, what do you make of that?
It's just incredible, John. The day-to-day volatility has been mind-boggling. Traders here are whiplashed, and I think that's true of people across the markets. There have been so many cross-currents. It can't sustain in terms of volatility like this, but it really has been wild to see, and hopefully slows down at least a little bit fairly soon.
Is it linear, or do you see a convexity where things are speeding up, like in the 10-year real yield? Is there a quickening there that you could predict for Q4?
Yeah, good point, Tom. Non-linear, I would say. You think about the 10-year real yield, end of July was ballpark positive 10 basis points. It rose 150 basis points in just a bit more than 2 months. So now it seems to us it's up to an area that I would call the right zip code. 160 to 2% seems reasonable, certainly in the context of prior Fed cycles and layering on additional inflation this time with respect to the U.S. German reals crossed over to positive territory in 10s too. That seems okay. So I suspect the speed is about done. It's going to slow down a fair bit, but volatility remains super high in 10s as well.
Let's talk about the step down, Mike. We talked about the pivot and then the pause, as John was mentioning, and now the step down, which is actually new. I hadn't really heard that until this morning.
But we'd already discussed it.
We'd already discussed it, right? Okay.
And now all of a sudden it's back.
It's back. It's a thing, right? How does the Fed communicate that it's going to slow down without allowing the markets to move ahead of it? And some people argue the reason why there's optimism in markets is because they're getting a sniff of the step down. Do you buy any of this?
Just a sniff. I think that's probably right. It seems sort of obvious the Fed eventually would slow down, and yet the markets are all excited about this. And you put it in context and say, all right, so let's say the Fed goes 75 next week and follows that up with a 50 at the next meeting. Is that really an amazing result for risk investors? I would say not. And ultimately, the destination matters in terms of terminal rate. But I think the thing people really need to focus on the most is how long does the Fed keep that that funds rate really high. So let's say up to 5%. We think it's going to be a long time, 6+ months, maybe a year. That's going to hurt equities, we think, and that's going to hurt risk. So that seems to be a little bit lost in the shuffle. People are too gung-ho on trying to predict the next couple meetings, not thinking enough about the destination.
Mike, what you just said is pretty interesting, that you could see 5% Fed funds rates for a year, possibly more, 6 months, a year, or even more. What does that do to the entire credit cycle that's predicated on pushing out maturities? Yes, but those maturities start coming up at the end of next year.
Yeah, it means this notion that you might have easy money come back fairly soon just doesn't really work. And credits probably take a hit with respect to defaults ramping up also. So it's not a positive in terms of credit, not a positive generally in terms of risk. But when you think about the incentives facing the Fed, especially Jay Powell, his #1 priority is and will remain getting inflation back into a box. That means boosting the funds rate quite a bit, we know that, but also keeping it up there for a while.
Just want to pick up on this move in the gilt market as well. At the front end, gilt 2 years down 25 basis points. Mike, have you even got a call on the gilt market, or have you thrown the towel in?
Yeah, gilt market, John, I think we'll take a pass on that one for now. Let's see how it plays out with the whole PM sweepstakes, and then we'll... Something about discretion and valor coming together, I think.
Yeah, I bet. Mike Schumacher, thank you, of Wells Fargo. That moves right the way through the curve, by the way. Two's out to 50s, yields lower by more than 20 basis points on each and every single point.
Yeah, and how much is that actually what's influencing the U.S. market with yields coming down? I loved his, yeah,
no, I'm good.
Yeah, no, not going to do that. Thanks.
That's how I feel about the UK right now. We have a system that throws up soap opera storylines. I get it. But we also have a system to deal with mess like the one we're facing. And also, it's been really funny for me to watch people traditionally on the left of the political spectrum endorse the market discipline of the last couple of months. Hasn't that been bizarre for you too?
Well, right now you kind of go where the wind blows, and the wind is blowing that if you don't follow that, then your entire economy is going to get tanked.
No, it's just funny to me that they appreciate the forces of markets and market discipline.
So
that,
pure.
You know, weeds out bad ideas. It's so interesting to hear that from the political left.
Yeah, but how much is that going to infect a broader swath, right? And we are hearing that even in the U.S. with certain Democrats who traditionally were more for fiscal spending come out for reducing the deficit and curbing some state spending, at least in the run-up to the election.
And of course, the other side of this view is that people traditionally on the political right who would endorse free markets are the ones pushing back against the discipline of market forces. Tom, the political world upside down in the last few months in the UK.
In the UK, but a lot of other places as well. And this is what we're seeing, this polarity of a group of people, John, with inflation, maybe with technological skill, doing well, and a whole other part of the United Kingdom, of Hungary, of Sweden, of Norway, of the United States, and of course over to Asia, that are saying this isn't working out. And the one thing I would say over the weekend, there's no election in the United Kingdom, so I can't comment on the turnout. Here, every report is record turnout.
Midterms 2 weeks away.
Yeah.
Swing it back towards the Republicans.
Can you explain why there's no election? I mean, who is voting for Sunak?
The MPs at the moment, Tom. And then it goes to the party membership. Do we have to do this every single time?
No, it's just absolutely bizarre.
I was waiting for that.
It's a parliamentary democracy.
I went to the Tudor show twice this weekend at the Met.
About this? The next general election, the latest that can take place, Tom, I believe early 2025. So you dissolve Parliament in late 2024. So the maximum term length of Parliament is about 5 years. Last election, 2019. So the Prime Minister would go to the King and say, can you dissolve Parliament? And then the King would say, yes, we'll dissolve Parliament because he's not going to say anything else. And then you'd have a general election. But he's not going to do that.
Starts with the
Or
Prime
she's not going to do that. Exactly. We got rid of that fixed-term Parliament
this
Act
is
a while ago.
un-American.
Precisely.
That's why it's the United Kingdom.
Futures up a third of 1% on the S&P.
Go see the Tudor show at the Met. It's fabulous.
What's the coverage like
Once
last
in a
week?
lifetime.
What was it like? You just talk about the Crown and stuff like that.
Yeah.
Okay.
You know, we quoted Wolf Hall. It was great.
Moody day in New York. Moody day here too, from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The world's biggest oil field services provider, Schlumberger, has a new name. It's now called SLB. It's rebranding itself as a technology company so it can go after more work in the clean energy space. Bloomberg's Alex Steele sat down for an exclusive interview with SLB's CEO.
The energy industry is facing a trilemma of energy affordability, energy security, and energy transition at the same time, to assure the future decarbonized energy system. So we believe we have a role to play at scale. We have the expertise, we have the global footprint, we have the technology DNA to make and to participate at scale into this.
SLB will continue to operate its legacy oil and natural gas business. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. The yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since the 2008 financial crisis. Now, investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts, great questions. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
Big beat. Stock is up more than 8%.
Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
When I hear people talk about inflation, we have to change that subject. Inflation is a global phenomenon.
Yeah.
The EU, the European Union, the UK, the British have higher inflation rate than we do here. It's not, the fight is not about inflation, it's about the cost of living.
Change the subject. That's the message from Speaker Pelosi on CBS over the weekend. Live from New York City this morning. Good morning. Here's the state of play in the markets right now. Equity futures on the S&P 500 elevated and pushing higher again, up by 0.4%. Yields on a 10-year down by 5 basis points, 416.45. Data out of Europe, not great this morning. The PMIs, let's call them what they are, Tom. Ugly going into the ECB on Thursday. Euro dollar 98.24.
I'm really, really glad you brought that up. John, on the break while you were looking at English football, I was looking at the Bloomberg Financial Conditions Index. I have a chart that shows UK, US, pretty much the same. And Europe is a wow statistic of restrictive policy.
I said it to Lisa in the last hour. If you told me 12 months ago we'd have a week in 2022 where we would have PMIs out of the Eurozone with a 46 handle on manufacturing, 48 on services, a composite at 47, and we'd be hiking 75 basis points that week, I would not have believed you.
It is a massive outlier on the Bloom. We'll have more of that. When is ECB? 27?
Thursday.
Yeah. It's a quiet day.
Super quiet. You taking the day off?
No, the day before I have jury duty.
Okay.
Like, can you
Very
see me
cool.
on a jury?
That's very American.
It's very American.
Very cool.
I had to postpone last time, so I got a personal note from the judge.
Okay. And what was special about Wednesday? He just
Special
said, just
about
be
Wednesday, that's the date they picked.
Okay.
You know, I said, oh, it's not the 27th, because I never get picked. Can you imagine?
So he wanted to make sure you
jury?
cover Apple earnings.
Yeah. They said,
after the close
you
on
know,
Thursday.
on 27th.
That's good of you to do that.
Thank you.
Thanks.
Anne-Marie Horton joins us right now, Bloomberg Yankees correspondent. She survived last night as a Yankees. Somebody had out on Twitter wonderfully, they had like the iPhone 3 the last time the Yankees won. Anne-Marie, let's get right to it. And what I am fascinated by is the turnout of America for this election. In 2014, long ago, it was a 36% midterm turnout. It exploded in a fractious 2018 to 49%. It looks like it could be that or more. Who wins with a big turnout?
Well, Tom, it's a great question, and I'm sorry you had to go there at the Yankees, starting my Monday morning off terribly wrong, but I'm going to be rooting, by the way, alongside the First Lady with the Phillies, and she was sporting their jersey last night. We should also know, if you're going to talk about the midterms and voting already 7.5 million people have already voted in early voting. So that's interesting, right? Because now we have seen over the past couple of weeks the economy really overtake the concerns. And then when you look at the economy overtaking concerns and some of the polls shifting, it does look like it is going to be in the favor of the Republicans. That's what Greg Valliere has out on Twitter right now. But you know, the Cook report says that at this moment, the Senate is still a toss-up. So that's really where everyone is going to be focused on over the course of the next 15 days. And we'll see some of that with debates out this week as well.
Which race are you watching? I mean, I can be smart and say Georgia, Nevada, that. Forget about it. Which is the Anne-Marie Horton Senate race that matters?
I think Georgia and Nevada definitely matter, Tom. I mean, these are places where in Nevada there is real momentum for Adam Laxalt to unseat the incumbent. There's also momentum potentially for the Democrats, though, in Ohio. Very Republican state. It went for Trump in both the past elections. But at the same time, you had Joe Manchin over the weekend there with Tim Ryan trying to get people from the moderate left and also the moderate right to really come out and support him over J.D. Vance. So I'm looking at Ohio, obviously as well looking at Pennsylvania, which John Fetterman is taking a completely different approach. In the past, he's actually bashed Joe Manchin, and he wanted President Biden alongside him campaigning. And they're going to have a debate tomorrow evening. And that would be a seat the Democrats could potentially pick up. But really, the Senate is going to be where it's going to be incredibly interesting. For the House, I think Greg Valliere put it very well this morning in his morning note, talking about the fact that it's not that the Republicans are going to win the House, it's how many seats do they gain that majority by.
And Marie, over the weekend, we heard a lot of talk shows, a lot of the Democrats trying to spin the narrative around inflation, around the economy. Not a lot of Republicans out there. Why have they fallen so silent on this issue?
I'm not sure they've fallen so silent, but they've been talking about this for months. So it's just part of the general campaigning for them. They're also now at the moment leaning into crime. But for the Democrats, you've obviously seen the shift. And Speaker Pelosi saying, we've never said it was just going to be about abortion. It was always going to be about both. Because remember, some of the polls were showing that abortion was really starting to resonate with voters. But I looked last week at the New York Times Siena poll, and for me, that really showed that the economy is so front and center and top of voters' mind. 26% say the economy, including the stock market, 401k returns, is top of mind. Then 18% is inflation, and then only 5% is abortion. And that was really the momentum the Democrats had behind them from the summer going into the fall to really try to maintain these votes, get out the youth vote, at the same time also fundraise on.
AMH, wonderful to hear from you. I'm sorry about the result. I don't get how a Yankees fan supports the Phillies after that. I don't get it.
Hatred of Houston.
You hate Astros that much that you support the Phillies.
I had a big discussion on this last night, and there was a great tweet out where it was a map of America in red, except for a little bit of orange down in the bottom of Texas.
Okay.
And that's really
so the rest of the country,
that's
supporting
That's
the
sort of what Fox TV you're going to see them sell for the World Series.
And that's because they cheated years ago.
That would be why. And
okay.
Yes.
You know, AMH was there over the weekend.
She's
Yankee
like
Stadium.
She's like, she's
walked away depressed and upset.
Yes.
And tired.
And tired.
Then there was the Tots. They were worse.
Do you want to talk about Spurs and Newcastle or no?
They got to get it fired up. When I saw the game, you could see they don't have the fire that I would expect.
Football's nuts. Now some people calling for Antonio Conte's head.
I don't know.
Football's ridiculous.
There's
Thanks to Anne-Marie. I need to say thanks to Anne-Marie. Anne-Marie, thank you.
Oh, thank you. I got like 8 more questions for her, but we'll do that tomorrow. Newcastle, seriously, they have new owners.
Saudi
Is it
money.
the new owners the difference?
I think the Saudi money has helped in the transfer market. I wouldn't say they went crazy in the same way that, say, the Manchester Cities and Chelseas of this world did when they got their newly found wealth years and years ago.
But maybe next year with this new conference,
they're clearly building something. Yeah.
Yeah.
Good luck to them. Top 4 this year. That might be a stretch, but they're there now, in and around. We done with Sport Chat? I think we're done with Sport Chat, aren't we?
It was good. It was good.
It was good?
Only 12 people turned off the TV. 5 turned off radio.
They turned it off. Why?
They go, talk to the markets.
They're upset about the Yankees.
Yes, yeah.
Futures right now. Talk about the markets right now. Up a 0.5% on the S&P. Had someone write in and say, who's this imposter who only said good morning once at the top of the hour? I apologise. Good morning to you. Coming up, Joanne Feeney, partner and portfolio manager at Advisors Capital Management. She'll join us very shortly. What a week ahead. An ECB rate decision, loads of earnings in the mix, and a little sprinkle of economic data. The good news, no Fed speak until next week. This is Bloomberg.
very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Coming off the back of the biggest weekly gain on the S&P 500, going back to June, and we add some weight to it this Monday morning. The rally continues. Futures up by 0.5% on the S&P. On the Nasdaq, up by around about 1/3%. Mike Wilson at Morgan Stanley made that short-term tactical bullish call on this market last week. This market ripped. He said this can continue until we see companies capitulate on a negative view for 2023 on EPS. When we start to see that bearishness come through, that's when this market starts to roll over. Until then, he thinks there's scope still for a move higher in this equity market, helped out by a move in the bond market on Friday. So we've had the calls for a pivot, a pause, and now it's all about a step down. You go from 75 basis point hikes down to 50, down to 25. Except we did this chat about a month ago, and then the CPI talk just blew it up again. So I would say any view on the Fed right now is at the mercy of the next CPI print, and that CPI print is only a few weeks away. It also delivered, though, a massive intraday range on a 2-year on Friday, about 20 basis points. That's how big the intraday range was on a 2-year. The low 440s into the low 460s. Right now, 445, let's call it. Yields come back in a couple of basis points. On a US 2-year, on a 10-year, down 7, after yields on a 10-year maturity in America climbed for 12 consecutive weeks. Not just a US bond market story, a UK bond market story as well. We'll pick up on that a little bit later. Tom, I want to go to foreign exchange as well.
Please.
The bonfire of foreign exchange reserves in dollar-yen, that gap lower overnight. How many gaps like that have we seen? They're trying to do something about it, TK. They are whistling in the wind. They're struggling to contain that yen weakness, and right now, dollar-yen just short of 150.
It's intervention the sequel, John, and what we know here, and this goes back to any number of ace academics, unilateral intervention never, ever, ever, ever works. That's where the Japanese are now, very lonely.
Another movie, Tom, with the same ending. Dollar yen right now, 149.35. That's the cross-asset price action. Let's get you some single names this morning. We can do that with Lisa. Hey, Lisa.
Hey, how's it going, John? We were talking about when does the EPS capitulation happen, and we were talking about the possibility of 2023 downgrades to the outlooks. We're already getting some of those downgrades to the outlooks when it comes to what big banks are saying about some of the big reporters that are upcoming, including Meta Platforms, Facebook. Bank of America downgrading its outlook for the company because of advertising concerns, and this really is on the heels of Snap. Those shares lower by about 0.8% ahead of the market. FedEx lower today, even after all of the pain, even after the downgrade revision, because Wells Fargo is saying there is more to come, or this comes after. I don't want to say correlation is not causation. Obviously, down 1.3%, but more interesting, Alibaba shares, these the ADRs, down the American Depository Receipts, down 12.2% in pre-market trading. And this comes after a whole host of pain. If you take a look at the view going back 5 years, it's just been absolute carnage. And this really comes on the heels of what we saw over the weekend with respect to the party Congress. How not positive is this for markets, particularly big tech, Tom, as we move toward an era where they really want to prioritize domestic domestic policies, even at the expense of not importing chips from the United States or even Taiwan, and at the risk of isolating themselves further and making them inhospitable to foreign companies.
We can do it right here, Lisa. We can do it into earnings here and also the Chinese story as well. I'm introducing my concept for 2023. Guess what? It's the great roll-up. You're going to see a roll-up here, the zombie roll-up, Lisa. I'm sorry. The companies that can't show solid profits, what do they do in the new yield environment?
It's a good question.
I hear silence there. Okay.
That's because she's gone, Tom.
It's a little switching.
She walked
I don't
away.
know. You know.
You know
okay.
this. What are you up to?
I don't know. I thought she was going to, come back to me and all that.
No.
You know? It's like the Tots passing in midfield. It didn't work out.
That's what that felt like.
Let's save ourselves with Dee Sassower, Chief Emerging Markets Credit Strategist at Bloomberg Intelligence. Damian Sassower with us. And I've got to go back to IMF and that. What is the knowledge a pro like you has of the liquidity of the emerging markets, of their reserves, of the tools they have given a dollar shortage?
You've hit the nail on the head. What do you do in times like this? You look at the reserve coverage ratios of all of these countries. And by the way, if you look at Asia, we were talking about Asian dollar index. Indonesia, Malaysia, the Philippines, reserves are at the lowest since the VAR shock of 2020. Thailand, lowest you've seen since, 5, 6, 7 years. So, reserve coverage is not good. And if you look at China, reserves are down 7% year to date to nearly that $3 trillion kind of mark, which is that, kind of psychological level. Yeah, declining productivity, debt, and demographics. It's not good for China.
South Korea, I believe, can go like Switzerland to Jerome Powell and get this fixed on an overnight basis. Can those nations you just mentioned do the same thing?
Oh, no, and that's what's impacting their import coverage ratios, which are down to 6-5 months, which, you saw the export numbers out of China. They were horrific. And if you look at near money coverage ratios, the amount of M2 in their system, they just can't print any more money to bail themselves
Guys
out
like
of
you
this.
look at Friedman M1, M2, M0.
Of course, near money coverage ratio is probably the best because you only get real-time data on that from the official, kind of governments themselves. So look, let's take a step back here. We saw some really, really bad activity data. Forget about the GDP data. If you look at unemployment in China, rose to 5.5%.
I saw that, 5.5%.
Fixed asset investment. You look at exports. You look at new home sales, new home prices down 12%. Real estate investment down 15% year over year. It's demographics, it's debt, and it's declining productivity. That's China for you.
Fed officials keep throwing around this term front-loading, and we keep repeating it. And it's a trick. They haven't front-loaded at all. They're playing catch-up.
Yeah.
The real front-loaders are in EM. Brazil, Chile. Can you talk to us about how the actual front loaders are performing?
Jonathan, why is the U.S. government not getting involved with the strong dollar narrative? They could very easily, because you're absolutely right. Currency intervention one way just doesn't work. You need to have some sort of a coordinated intervention here in order to protect those reserves. You're not seeing that. The U.S. government is persona non grata. Why is the reason for that? everyone keeps asking. The only thing I can kind of hang my hat on is perhaps China, because if they do any sort of currency intervention with Japan, with the UK, et cetera, what that means is that the yuan's going to rally off the back of that. That may not be in the best interest of the U.S. government. I'm just speculating.
I have more sympathy for the central banks that have done the hard work. Brazil hiked interest rates early. Chile did the same. I look at Japan, and you'd have to wonder, sitting at the Treasury, you'd be sitting there thinking, well, why on earth would we do any kind of coordinated response to help out what's happening abroad when they're still doing yield curve control?
Yeah. Well, look, they have to adjust that policy, and they can, right? They don't have to target the 10-year. They could target the 5-year. They could widen the band. Japan can do a lot of things, and this week we'll know a little bit more about what they do intend to do. But if they just sit idly by in their hands, this is just going to go on and on. So I agree with you. I think that there is more to come. I think we have Brazil this week. We have Colombia this week. We're going to see if those central banks start to tap the brakes here on the tightening. I imagine they will, because activity in places like Brazil and Colombia have just fallen off a cliff. They're technically in recession right now. So, yeah, things are not good for EM. I struggle to find any sort of a bullish narrative whatsoever for the emerging markets.
So in other words, even if they do pump the brakes in terms of how much more they hike rates and they try to support their economies, that's not going to draw foreign investment back into the nations.
Well, now foreign investment's a completely different story, right? Because I agree with everything you're saying. I don't think you see any sophisticated institutional investor in today's market willing to take on the geopolitical risk with, look at sovereign credit default swaps across the planet. So, I just think, it's safer to just sit in cash. And what is cash? Cash is dollar.
You said that you are surprised that the U.S. has not played ball with any of these discussions with some sort of more coordinated effort. Why would they, right? And because basically this is helping the United States in a disinflationary kind of way.
Well, is it? I mean, that's the question I have, Lisa. I mean, is the Fed making decisions that are in the best interest of the U.S. economy if they send the whole rest of the globe into recession? That's going to obviously spill back into the U.S. I don't think they necessarily want that, but what more can they do? And in an inflationary environment, that is the quagmire that we're all confronted with. I genuinely believe the U.S. needs to get in front of this. I mean, having the dollar as the world's reserve currency in a world like this may not necessarily be in the U.S. economy's best interest.
Damien, I want to talk about how DM has looked down its nose at EM for a long, long time.
Yeah.
And when it comes to central bank independence, I think we've all had a joke over the years about what's taking place in places like Turkey, for instance. And I'm just wondering, are you expecting the same kind of backlash in developed markets towards central banks that we've seen, say, in emerging markets over the last few years?
John, I think we're seeing it. And I think what's really interesting about it is, look, all of this stuff about reserves declining and reserve deterioration is because of the dollar and its strength relative to the other G9 currencies, right? So for me, this is all about dollar divergence, and there just has to be a way to kind of mitigate that volatility. It's that uncertainty surrounding the dollar which is driving everything in my mind.
We don't do this enough. You can go to the Bloomberg terminal and dip into Damien Sassar's world. John, the Columbia 10-year piece, 98 to 63 since September.
Big move.
98 to 63.
Okay, I'd say pick out the old 30-year from the Treasury that was issued around the pandemic and see how that's performed since then over the last couple of years. Similar performance.
My friends in Medellin aren't doing well. They're struggling out there. Colombia.
I hear it's nice there.
It's beautiful.
Medellin.
Yeah, no, I mean, I've heard it's beautiful. I've actually never been. Full
Cartagena was
disclosure.
beautiful.
Oh, yeah.
Loved it. Fantastic.
You've been there?
I've been there, yeah. Cartagena was wonderful. You should make it down to Colombia, Tom. Good time.
Which country should
not
our
listening,
viewers
Damien.
and
Thank you.
listeners focus on?
Well, I would say...
You wake up in the morning, which is the country?
Well, I mean, I would say right now, given where we are today, I think the Philippines are an absolute interesting test case on what is going to happen to an Asian economy whose reserves are deteriorating and whose currency is at an all-time low. What is going to happen there? Is the U.S. going to bail out the Philippines? I mean, Duterte hasn't really risen to the occasion. Now it's, your friend Ferdinand Marcos. I hate to, call a spade, but he's not inspiring much confidence in foreign investment. So where are we here? I don't know.
This is dangerous ground.
Yeah, I go right back in your wheelhouse, Tom. Sorry about that.
You're killing me, Damien. You're absolutely killing me.
Damien, thank you.
A loaded question.
Thank you. Tom, any word? No?
I think Philippines is an example off of Taibat as well. Each story is different, but it's the same. Philippines at 58 is unimaginable with massive domestic harm. They break out to that round number 60. No one's prepared
Was that
for it.
a round the world tour with Damien Sassar?
That was.
I'm sorry, did I say Philippines? I meant the Phillies. that's my mistake. I'm sorry about that.
Do you want to talk about the Phillies?
I'd like to see them. I'd like to see them beat. I'd like to see them beat the Astros, of course. I mean, Yankee.
Everyone hates the Astros, don't they?
Hate the Astros.
Brutal. Joanne Feeney, partner and
Javier
portfolio
from the
manager at
Astros blew me
Advisors
away.
Capital
They're
Management.
so good. They're so
Will be joining us very, very shortly. Tom's going to spend the rest of this morning talking over me or ignoring me, which is what we often do. Just not on the same wavelength today, aren't we?
No, it's Monday. We're getting to Thursday. Thursday's
You're
big
just thinking
day.
about your day off on Wednesday.
It's my day off.
Futures elevated, 0.75% higher on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means more policies that are not market-friendly. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson had pulled out of the race, and Sunak has received public endorsements from more than half of the Conservative members of Parliament. Meanwhile, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to withdraw from the race. She needs support from at least 100 Conservative lawmakers in order to go forward to the final ballot. A new report from the National Association for Business Economists shows more than half of those surveys said a recession is more likely than not, while another 11% said we're already in one. The data also indicated an easing in labor market tightness at firms, with higher employment and wages over the past 3 months, but hiring plans and wage hikes weakening over the next 3 months. And in baseball, it will be Houston versus Philadelphia in the World Series. The Astros wrapped up a 4-game sweep of the New York Yankees with a 6-5 win to take the American League. Philadelphia beat San Diego 4-3 to win the National League title 4-1. Game 1 of the World Series, Friday night in Houston. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
When U.S. inflation numbers are released,
the score is inflation won, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
haven't seen that big adjustment both on the household side and the corporate side. And when it happens brutally. And that's the issue. We don't know when it's going to happen. We don't know how much the Fed exactly has to tighten. It's probably already over tightening, but it has no choice.
Seb Galley, one of the best over at Nordea now. Nordea Asset Management Senior Macro Strategist, live from New York City this morning. Good morning. Equities picking up on the S&P, up by 8 or 0.9%. This rally continues. Yields lower by 6 basis points on a 10-year, 4.1561. Data out of Europe, really not great this morning. The PMI is in the 40s, sub 50, never good. Euro dollar 98.34, going into the ECB on Thursday and looking for a 75 basis point hike. Euro dollar negative, 0.33%. Tweet of the morning comes from James. Why do I keep getting the sense that Faro TV wants the Hu Jintao Tom Keane? Meanwhile, Lisa is playing the part of the mayor of Shanghai. Isn't that good? I think that's good.
Oh, I don't know.
TK, what'd you make of that?
Huh?
Does that make me she?
That's what that sounds.
Well, let me talk about who. He was in Washington, and I had the honor of interviewing Orville Schell and the giant Jonathan Spence on the shift then. And that was a conversation, 2 conversations of optimism. It's gone.
Yeah, and Tom, I think
it's gone.
The optics of what took place on a weekend not lost over anyone. Wasn't that meant to be the message, that that's gone, that era's over?
It's his messaging. But what is so important here is the Associated Press lined up the 7 members, I got to be very careful here, of the Politburo. These are not, there's one guy who you could say is an academic. The rest of them, there's no sense of international relations or maybe even the domestic relations of the Chinese empire, the domestic empire.
Lack of senior level experience is something that a few people said over the last week. Top level, senior level experience.
At a federal level, yes. Yeah. It goes back to the city-state concept of Japan, which I'm an amateur on, but it seems like the new guy is the former mayor, if you will, of Shanghai.
Well, Tom, there's the weakness for you. Dollar CNH just moves levels we haven't seen before.
I agree, and you have to believe that markets will speak here. I think Damien brought it up, and you seconded it. The Chinese unemployment rate was a statistic that caught my attention this weekend. How do they move forward with a 5% unemployment rate, and do you believe that number? The answer is no.
I said to Lisa, how reliable is the data? And are we going back to the old years of just not knowing what's going on in that economy?
There it is, and on Yuan, a CNY this morning, 7.26, which is stunning in its own regard. Joanne Feeney joins us now, advisors, capital management partner and portfolio manager here on quality, very timely as we go into the back end of this week with quality that makes profit. Joanne, how important is profit into 2023?
Well, good morning, Tom. It's what the focus is right now for investors. I mean, obviously in the middle of earnings season, and it isn't so much the profits of the third quarter that will be watched here, but the outlooks for the rest of the year and for 2023. I think investors are waiting for the other shoe to drop, something I wrote about this morning in the firm's commentary. And we're starting to pick up a different trend, really. Some of the companies look like they've been de-risked in the sense that the expectations have moved a lot lower. But in this economy, the recession risks that we're seeing are by no means uniform. There are companies still serving industries with shortages, while others are really suffering.
Which factor will matter into 2023? Think of Steve Ross and a factor analysis. Which one will avoid loss and possibly participate in gain?
You know, Tom, I think it's going to be less broad factors here and more company-specific dynamics. I mean, look within the consumer sector. You have some areas of that market that are doing well, like the travel area, for example, while others in the middle market are really suffering as some consumers really tighten their budgets because of this high inflation. You look at a company like TJ Maxx, likely to pick up a lot of consumers as folks go out and do some bargain hunting. So it's not a uniform thing. I don't think the factors are really going to help us very much. I think you have to dig into the profit outlooks of companies.
But Joanne, there are entry points that are better than others. And as you look at some of the outlooks, are you looking at companies that have been beaten up, or are you looking up at resilient companies that perhaps could hang in there for longer, right? I mean, that's sort of the conundrum right now, as some people sort of lament the overlay of gloom on everything.
Yeah, Lisa, it really depends on what sort of investor we're handling. You know, some of our clients are older, they're retired. They really, at this point, want to continue to get some of the higher income that we're trying to deliver through some of our specialty portfolios. You know, if you can lock in higher dividend yields, 3, 4, 5, even 6% or more, they can ride out the volatility and just get past this crisis. And eventually, I think, you know, we're starting to see the growth investors potentially looking beyond the crisis. What is really going to happen in 3 years, not in the next 6 months or 12 months? So if you're more of a growth investor, you want to look, as you pointed out, to resilience, to quality, to the secular growth trends. Maybe it's a company like a Broadcom or a Texas Instruments still dealing with shortages with very strong end market demand.
How much, Joanne, do you pay attention to the day-to-day noise that's getting a lot louder in terms of the magnitude of these moves at a time when you kind of have to stick to your guns and have a thesis about a specific company or a specific area?
You know, Lisa, I like the stick to the guns phrase that you just used. You know, the day-to-day noise is exceptionally high right now, and it's really disturbing for a lot of investors. You know, again, you know, for some of our folks that are retired, that's why we like to give them the dividends instead, so they can, you know, less focus on that. But, you know, from our perspective, the day-to-day noise is a distraction. You really have to dig into the fundamentals. We're doing both the top-down approach, looking at all those macroeconomic risks and potentials, and also looking at the bottom up, looking for quality companies with strong secular end markets. You know, even in this period where these stocks have traded off so much, you can look at a Palo Alto, for example, or look at a Lockheed Martin or a Broadcom. These are companies that have resilient growth ahead of them. While it might be painful to own, you know, as these stocks get jostled around, when you look to the 3-year horizon, these are going to be stocks that are going to help the portfolios of our clients.
Joanne, wonderful to catch up. It's been too long. Thank you. Joanne Finney there, Advisors Capital Management. Building on the work of Mike Wilson and Morgan Stanley on the earnings outlook, I want to bring you the quote. It's getting a lot of attention this morning. Last week's tactical bullish call was met with doubt from clients, which means there's still upside. He went on to say, falling inflation expectations can lead to lower rates and higher stock prices in the absence of capitulation from companies on 23 EPS guidance. So we often take, I was going to use a different word, take the mickey out of the equity market bulls that keep looking for that pause from the Federal Reserve. The equity market bears have been looking for this deterioration in the earnings for quite a while as well. So who's going to be right first? Do the bulls get the Fed pause? Or do the bears actually get this earnings guidance that rolls over in the way they've been talking about for the last couple of quarters?
What counts, though, is earning guidance rolling over? Because we've already seen earnings guidance come down. And we've actually seen an underperformance if you take a look at the percentage of beats this particular earnings season so far, with about 20% of the companies reporting versus the average over the past 5 years. So when will it count as capitulation in the EPS?
Companies adjust, Tom.
They adjust. And what's important here is you're going to look at the revenue dynamic, come down the income statement, and then go to free cash flow. What percentage of companies, John, are in that universe of decent revenue, decent earnings, decent free cash flow? It's teens weens. It's small.
I think it was you that said this morning, a third of the S&P this week reporting.
It's got to be market cap. I haven't done the math, but it's got, 28%, whatever the number is. It's a big number.
Coming up on the equity market, on bonds too, Tony Rodriguez, the head of fixed income strategy at Nuveen. Looking forward to that. From New York City, good morning to you. This is Bloomberg.
We anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future.
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
We haven't seen that big adjustment both on the household side and the corporate side. And when it happens brutally.
That's the biggest issue going forward, besides what the Fed is doing. It's the earnings reset, and we haven't really seen that yet, and I think it's coming.
I don't think the Fed blinks. Okay, so the Fed will blink if there's an event.
We're pricing a very high probability of the Fed going to 5 and staying there forever, which doesn't seem plausible.
In a very unusual way, the Fed has painted themselves in a corner.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A Monday before a big Thursday. We welcome you on Bloomberg Radio, Bloomberg Television. We are focused on the market with a lot of other stuff going on. China, the United Kingdom. John, let's just say it again. Equities lift.
Equities lift and yields are lower, Tom. So you're going to love this, aren't you? We've done the pivot chat, the pause chat, and now it's the step down.
It's step down chat.
Off the back of a Wall Street Journal story on Friday. It means that you hike 75 at the next meeting.
Then you go
50, and then maybe 25, and then maybe you stop. TK, I've got no idea, but I think we're all on the same page. Any call around that is at the mercy of the next CPI print. And you'll get that in a couple of weeks' time.
I agree with you that the CPI print is way more important than the jobs reports to come out here in the beginning of November. We've got to remember, folks, November all of a sudden here as well. John, you mentioned PMIs in Europe, and I'm sorry, not reported today and seen in the market data is a tangible slowdown in Europe.
I couldn't agree more, Tom. I think we've got to frame this as follows. Can you imagine even 12 months ago, even 6 months ago, if I said to you, PMIs in the 40s, same week, 75 basis point hike from the ECB. And the pushback you'll start to see from politicians, I think, is going to get bigger. It's going to grow louder and louder. There's a column in the FT a little bit earlier this morning, Tom, that's talking about that. Prepare for the political backlash to what these central banks are up to. If these central banks send the economy into recession, responding to the inflation story of the last 18 months, then I think it's going to be more than just Senator Warren, Senator Sanders that you hear from.
And what Claudia Sam said there in the intro, very critical of the Fed, Lisa, it's about actions of central banks forward and what that means for the economy in Q1. This week, economic survey, 2% plus U.S. GDP, that may end.
Right. Well, on the flip side, you have people saying that you can have more economic pain than you'd like, but if you pivot too soon, sorry to use that word, and you start to lower rates, that will actually allow inflation to carry on. So you won't kill inflation, but you'll feel economic pain. And that's the warning sign that you're hearing from the likes of Mohamed El-Erian and many others.
Bill Dudley
as well. And so how much pressure is there on the other side? Let's not have a repeat of the 1970s.
My repeat, John, is the 10-year real yield is stuck. It sustains 1.61. I like what Mike Schumacher said. It says it's in the zip code of where it should be.
Nominal yields as well at the front end, Tom, just massive ranges. Massive ranges on Friday. I think we had a 20 basis point range at the front end of the yield curve on twos.
What is it today in the United Kingdom?
I've seen a massive move lower in yields over there. Twos all the way out to 50s.
I try not to mention the United Kingdom here because we're waiting for the next hour for that, but there it is.
To see who the next Prime Minister may or may not be.
Is that 9:00?
You could find out at 9 a.m. Eastern time. If it's just Rishi Sunak who's got past that 100 vote threshold.
Is this like a sign in front of Buckingham Palace they do this?
Yes, they'll walk out, Tom. The king will come out and say, address you personally and say, Tom, this is the next. That's not what's going to happen. All right. Futures are up 0.7% on the S&P 500. Equities advancing on the S&P. Yields look like this in a bond market. We're down by 5 basis points to 416.24. Tom, I keep going back to this stat because it's just phenomenal. 12 consecutive weeks, 10-year yields.
1984.
1984, is that the number?
84.
That's the last time that happened. 12 weeks, just unreal.
Yeah, unreal, and you see it, as we mentioned with Damian Sassauer, Colombia 98 to 63, and John, on the break, I did the U.S. 10-year, 14% in the equivalent period, down.
Close to 420 right now on a yield, on a 10-year.
Tony Rodriguez says that will come in ahead of fixed income strategy at Nuveen. Tony, can you really say, as you publish in your note, that we can get a 10-year yield that actually comes in, bond price up, yield lower?
Well, good morning, Tom. Good to be with you. We do think that by the end of the year, we should see some reduction in the 10-year. Certainly as we move into 2023, we're expecting rates to come down. But that's largely driven, Tom, by what we're expecting to see in terms of economic weakness. So we're going to see a third quarter print for GDP that's going to be pretty healthy. We think that's the last one that we'll see. And as we move into 23, our expectation is that the most likely outcome is a recession in the U.S., likely to be a mild recession in our minds, but we do think we'll see that. And as the market begins to digest that and price that in, both to rates and risk assets, what we'll see on the rate side, we think, is a decline from here.
Are you willing to say that Friday, the intraday high in the 2-year, was the high of the year? Are you willing to go there, Tony?
Well, I think there's a very high probability that will be true. Obviously, you can't say that with 100% certainty, but given our expectation that we do think we'll begin to see some moderation in inflation, it's clearly been surprising to the upside month after month. Eventually here, we think some of the leading indicators that we're seeing on inflation will begin to show through in the data. And if that begins to happen, along with this economic weakness that we're expecting to see, and it'll be clearer, we think, as you get into the end of the year, then I think you can say probably that we've seen the high in the 2-year. And if it hasn't been the high, it's going to be extremely close to that high.
That's a pretty bold bet. We like that you take a position. Now let's translate that into what that means in terms of risk appetite. Is that a positive or is that a negative, considering that for much of this year and for much of the past decade, any kind of downset or a reset with respect to Fed policy lower has been a positive for risk?
So I think that it's not a positive for risk assets. I think right now the markets might be a little too optimistic if they're rallying on the view that maybe a step down to 50 basis points at the December meeting is going to be helpful to risk assets. Our view is that you will see a step down to 50 basis point absent inflation really surprising to the upside, and that in 23 you'll see 1 or 2 more tightenings. But the key is that we think the Fed will basically stay at that level throughout most of 2023. So we still think that risk assets have a little more weakness to price in for that weakness in the macro economy that we're expecting next year.
How big of a difference is it between a 4.5% Fed funds rate that they keep for a full year and a 5% Fed funds rate that they keep for a year? Is there a significant difference in terms of the bleed through into the economy, the bleed through into high yield bond issuers?
I don't think that makes for a significant difference. I think the real difference would be is if you get well north of 5%, because inflation proves to be even stickier at a higher level than we're expecting. So that would be a very negative bleed through for risk assets. But whether we end up at 0.5 to 3/4 or 3/4 to 5%, I don't think that makes a huge difference for risk assets. But we do still think that whether it's the equity market, whether it's risk assets within fixed income, that there is still going to be some better entry points as we move through the balance of this year and early in 23.
Tony, we talked to Mike Schumacher of Wells a little bit earlier this morning about the intraday swings in the bond market. You've got gilts down by more than 20 basis points, twos all the way out to tens. We asked this question to Mike. I'll ask it to you, Tony. What do you make of that? Just the intraday swings we've seen, not just in gilts, but we saw it on Friday in treasuries as well.
Well, Jonathan, you bring up a good point. I mean, obviously the gilt story has some unique characteristics to it, particularly on the political side. But when you look at other broader markets, you're seeing that same kind of volatility. I think it's really down to two primary things. One is that there's a tremendous amount of economic uncertainty, both on the inflation and the growth front. So that drives some of that volatility. But at the same time, you have some impaired liquidity in the markets. You're seeing investors, obviously, on a flight to safety move, causing outflows. You see central banks obviously being less of a player as they move towards into quantitative tightening. So that reduced liquidity also kind of creates an environment where this type of volatility is something that we think you'll see still for the next couple of quarters.
Tony, awesome to catch up, buddy. Thank you. Tony Rodriguez there of Nuveen on the damage done in the bond market, Tom, and the damage done elsewhere too.
We're not doing enough of this. I'm hearing too many guests. Tony was great there, rationalizing through spreads and sophisticated blah, 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 what's going on. Bonds, negative 18%, maybe negative 14%.
Yeah.
I looked at SPX, which I never look at because, Lisa, you know I'm always looking at the Dow. And the answer is you look at a better index like the SPX with better math, and for them to get to one arbitrary resistance level is a 7% move. SPX has to go up 7% just to get to resistance. That's how bad it's been. I don't think there's enough talk on that.
On the price, the damage to price in bonds. That's ultimately the point you're trying to make.
The point I would make is this financial media, and I'm as guilty of this as anyone, is
Talk about yields, not price.
yield. You know what? When it's in your portfolio, it's price.
I mentioned the 30-year treasury that would have been issued around the pandemic. Lisa, if you look at the performance of that in the last couple of years, it kind of speaks to what Tom's talking about.
There's been a whole lot of pain, and you're seeing it in public markets. There's a question about what happens when you see the repricing in private markets. Tom, is your point, though, this is something that's really important, that it's going to foretell more pain to come because people see their portfolios, they withdraw money. Is it that cycle, or is it just that people are misrepresenting the scope of the pain?
We've made a spoof on it for a decade. On Bloomberg Radio with John Tucker, he opens his 401k envelope. You know, we have a sound on radio of the envelope opening.
That's great.
And we open the Tucker 201k. It's a joke, except right now it's not.
No.
Even folds John into the election, frankly.
And it's not just stocks, it's also bonds, and it's them in tandem. And we've talked about the 60-40 portfolio. There has been no hedge, which is the reason why people have been flooding into cash. You know, just at what point that turns around and how robust that turnaround could be, I think is the main question, right? If you're getting yield now for the first time and you're seeing some sort of beaten up equity valuation, then people have been trained to think there's an upside here. I mean, essentially, this is a Pavlovian response from markets.
I've got the number for you from Beth Stanton here at Bloomberg. Fantastic on fixed income. Today in bond math, and this was Friday, the 30-year treasury sold in May 2020 with a 1.25% coupon, just traded at 50 cents on the dollar. That speaks to what you're saying,
That's
Tom.
edge of Austria. Look how that worked out for me.
Brutal.
71% move on Austria.
Futures on the S&P up 0.8%, live from New York. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The world's biggest oil field services provider, Schlumberger, has a new name. It's now called SLB. It's rebranding itself as a technology company so it can go after more work in the clean energy space. Bloomberg's Alex Steele sat down for an exclusive interview with SLB's CEO.
The energy industry is facing a trilemma of energy affordability, energy security, and energy transition at the same time to assure the future decarbonized energy system. So we believe we have a role to play at scale. We have the expertise, we have the global footprint, we have the technology DNA to make and to participate at scale into this.
SLB will continue to operate its legacy oil and natural gas business. Investors are having their say on Chinese President Xi Jinping's move to stack his leadership ranks with loyalists. The yuan weakened and Chinese stocks fell in Hong Kong to the lowest level since the 2008 financial crisis. Investors are skeptical that Xi and his allies will seek a rejuvenation of private enterprise. In the UK, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to pull out of the race to become the next prime minister. Rishi Sunak has picked up public support from more than half of the Conservative Party members of Parliament. Mordaunt needs the back of at least 100 lawmakers to go forward to the final ballot. The U.S., UK, and France are rejecting Russia's allegations that Ukraine is preparing to use the so-called dirty bomb. A statement from the three countries' foreign ministers called Moscow's claim a pretext for escalation. A dirty bomb combines conventional explosives with uranium. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Lenny Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg. Earnings season is here.
The earnings are starting to pour in.
The numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going across the wire.
A big beat.
Stock is up more than 8%.
Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
I think the gilt market has actually calmed down quite a lot. And one of the big differences between the UK and US is that things can happen very, very quickly in the UK. All of those fiscal proposals have basically been abandoned. I think that the worst is past us now. And I think we'll probably see a period of calm after the shock.
Love Steve. Steve Major there, HSBC Global Head of Fixed Income Strategy. Tough year for the bond bulls, that's for sure. From New York City this morning, good morning. Your equity market looks like this, elevated and pushing higher once again, building on the gains of last week. We had some more weight back into the S&P, up 22, advancing 0.6%. Yields lower by 2 or 3 basis points on a 10-year to 4.1876. Euro dollar 98.43, negative 0.2%. Dollar yen 149. You get the theme here, bit of dollar strength out there, with the exception through much of this morning, Tom, of pound sterling. Pound sterling, cable, unchanged.
Well, unchanged, 113, and I guess that's better than 111, which we saw briefly, even 110 we saw in the carnage last week. What we learned last week is that Lisa Bramwitz and I had a book club. We were reading Wolf Hall together to try to get ready for what we're going to see this morning. John was missed, to say the least, and John, I go, just this happens to be the Telegraph and Bloomberg as well, where Penny has 90 votes, so she's 10 away from where we would be in 41 minutes. I'm lost.
It could be really interesting if she gets over 100 and has a runoff with Rishi, and the party membership leans towards Penny and away from Rishi.
But does the party membership have a voice in this?
Not yet, but it could
they
do,
will.
Depending on what happens at 9 a.m. Eastern Time, 2 p.m. local.
Why
Danny
don't you go to
Berger
our
joins us now at
expert?
Westminster. Danny, let's start there. What happens at 2 p.m. local time where you are?
Well, that's when the voting of the Conservative MPs stop. It doesn't mean that we'll get an announcement right away. We will wait for Graham Brady of the 1922 committee to give that announcement. But look, it could come at 2:05. It could come at 2:15. So that's when we will learn, does Penny Mordaunt have the 100-vote threshold to send this to the 170,000 Conservative Party members? At the moment, as you say, she says she has 90, but publicly we should say it is just 28. So we're still not sure exactly what the numbers are.
Before we even get to the party membership, Danny, I understand there's going to be this indicative vote of MPs if we get down to, say, 2 candidates, if it's Penny Mordaunt and Rishi Sunak. Is this basically to say we need to work out whether you're going to have the ability to govern before we go to the party membership for that vote?
Well, the indicative vote isn't binding. It's saying to the party membership, this is who we think should be the prime minister. But imagine the awkward position that Penny Mordaunt finds herself in if Rishi, as he seems like he is now, gets more than half of the votes, and let's say membership brings in Penny. How do you run a government? How do you form a stable government if half of your MPs are not backing you? So it could lead to an awkward situation, even if the members do, in fact, vote Mordaunt in.
How important is it, Danny, that we have a sense of who the chancellor will be for whoever becomes the prime minister?
Well, for markets, it's hugely important. It does seem that Jeremy Hunt, for many, is favored to stay in, especially if it's Rishi Sunak. One guest described his policy as Sunak on steroids. But really what we want to see from a chancellor is just orthodoxy returns. They want a safe pair of hands. They want stability, because at the end of the day, how much can a chancellor enact, given the structural problems that still face the UK?
When a presidential election, John, I guess there's some jockeying, you know, if you support me, I'll make you Secretary of State. I guess some of that goes on. Is that what's really going on right now? If the Telegraph says Penny's near 90 on her way to 100, is she saying to so-and-so, I'll make you Education Secretary?
I don't know how direct it might be, Tom. I haven't got any insight into what's happening behind closed doors, but you can imagine that kind of thing is happening.
Yeah.
You have the opportunity to have a cabinet position if you support someone. That's just there for everyone to see. That's plain and simple. TK, for me, what's interesting about 2 o'clock local time and 9 Eastern, if we get 2 candidates, and one is Penny Mordaunt and the other is Rishi Sunak, and you get this indicative vote that basically says to the likes of Penny Mordaunt that you're not going to be able to govern this party in Parliament, whether she drops out or not, or continues to go forward. Right. And if she continues to go forward, you could have this situation, and I'm not here to say it's going to happen or not, you can apply your own probabilities to this scenario, but you could have this situation where you get the likes of Penny Mordaunt winning that vote from the party membership and not having that ability to govern the party within Parliament in the same way that maybe Sunak could.
Let's go delicate here for our American audience, and we can do this with Danny Berger, with their experience really on the cusp of the Civil War at the University of Virginia. John, Rishi Sunak is a different guy. His parents, his grandparents came over. The history's there. We don't have to go into it now. But this is a smart kid who worked at Curdy's Curry Bar in Southampton to make it into school, etc. His story, how does it resonate? Or in England, in Britain, in Wales, Scotland, it doesn't resonate.
Well, I think the one thing that people are focused on with Rishi Sunak, particularly over the last 12 months, is the wealth he has now, the wealth his wife has. And Danny, I wonder how complicated that would make it for this Prime Minister, if he does indeed become Prime Minister, to basically implement another round of massive austerity. How much pushback is that Prime Minister going to get?
Well, it would be extremely unpopular. Jeremy Hunt, in throwing his support behind Rishi Sunak, even said himself that this is about the short term. They might have to take unpopular decisions. I think the assumption is austerity, higher taxes, less spending. It would indeed be unpopular, and that brings them into a difficult situation the next time a general election rolls around. And to the point of his ability to appeal to Tory party members, everyday people, this is a very polished individual. Penny Mordaunt is seen perhaps as someone who might pick up more of that Boris Johnson type firebrand support versus Rishi Sunak. So it's a very different dynamic between the two.
Danny, wonderful coverage as always. Danny Berger, over in Parliament, over in Westminster, Abington Green, I believe, over in London. Lisa, are you excited for 35 minutes time? Can't wait.
Well, there's a broader topic here that I've been really kind of interested in. There was a New York Times article comparing the MP system and the voting for the new prime minister to the primary system in the United States and how it leads to potentially the more extreme versions of parties because they really are just voting amongst themselves, right? And so there's a sort of question about what that does overall and whether you get markets kind of coming in and disciplining on a broader level and changing that dynamic, I think is kind of interesting.
How does Labor respond to all this? Do they just sit on their hands? That's what we do in America.
I just feel like we're getting deeper and deeper into the weeds. The difference between the Conservatives, Labour, the UK, the United States, a difference in degree. Let's talk about a difference in kind. The sharpest contrast over the weekend is how the West can't get it together, and China and President Xi has just doubled down and tightened his grip on power. That's going to be the defining political moment for the next decade.
And again, as I mentioned, in America, it's the one thing everybody's on. It is, without exaggeration, the one thing Republicans and Democrats are on.
There aren't many things we can say with confidence, but I can say this with confidence today. We're more likely going to be talking about what happened in China in 10 years to come than what's happening in Westminster right now.
Couldn't agree more.
35 minutes.
From New York, this is Bloomberg. Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
When U.S. inflation numbers are released,
the score is inflation one, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
To the gains of last week, the biggest weekly gain on the S&P 500 going back to June. We had some weight to the S&P again, up 0.5%, fading just a little bit, but futures still elevated. Yields lower, not as low as they once were earlier this morning, down by about 2 basis points now to 419.39. So some of that move in the bond market unwinding just a little bit. Keep an eye on that. In the FX market, dollar strength sticks against the euro, Tom. Euro dollar 98.36, negative a third of 1%.
You're dead on. What hasn't moved this morning is euro. You'd think it was 0.97, 0.96 into the tension of later this week, and it hasn't.
Dollar China, though, Tom. Well. It's not just the euro. Dollar China, dollar CNH. That move of more than 1 percentage point, literally at levels we've never been to before.
The shock maybe of the video over the weekend, but far more than that, it's a shock of who the makeup is, and I guess it's now forward. And to me, is money exiting out? Is it institutional big money exiting Hong Kong?
We're having that conversation in a much bigger way, TK, in a much bigger way. The question going into it, and it's Lisa's question from early this morning, and it's the right one. Do the events of the weekend make it more or less likely that President Xi sticks with COVID zero? And most people concluding this morning, it makes it more likely that he sticks with COVID zero.
No question about that. And to Curran, thank you so much for staying up late into the Hong Kong evening to brief us earlier. Right now, Laura Ram joins us, Chief U.S. Economist, FS Investments. Laura, I go to ECO Go, and there is a raft, a Seattle slew of economic data coming out this week. And I look at it, and it mostly shows a resilient economy. Looking back, are you surprised where we are right now with 30, 40, 50 lines of ECO Go data? Not all that bad.
No, because our economy has so much positive momentum. And this is what happens when you're just early in an expansion. I think that's maybe the big question. Are we early in an expansion? Or are we late in an expansion? We're pretty early in an expansion. And we had so much fiscal stimulus, so much monetary stimulus thrown at us.
Right.
We're a big ship, Tom. It takes time to turn it.
And you've been a student of this for decades, going back way before you showed up on Wall Street. And my answer is, So we get a 5% 10-year yield for whatever reason. Is that the end of the world as we know it? We used to live that way, right?
It's not the end of the world as we know it. It's just a continuation of what we've seen. I mean, the volatility in the Treasury market is so extreme. We could be there in the next 10 days. I think at the end of the day, what we're now looking at, is the Fed moves later this year, the Fed moves beginning next year. Markets are so tripping over themselves to try to look around the corner, and it's causing these wild swings in expectations. And we're just stuck in this higher volatility world that is, with the economic uncertainty, it's crushing all these traditional asset classes.
Laura, you mentioned that it takes a long time to turn around this economy, and this is the concern of some people, the lag effects of the policies that are being implemented today. Do you have a sense of the difference between when the interest rate rises will affect the inflation side of things and when it will affect the economic momentum side of things?
You know, this is, to me, one of the critical questions when I get asked. It's what do I think the Fed should do versus what are they actually doing? And I think the time has come for them to take a slower pace of rate hikes and wait and see what kind of shape the economy is in. But the reality is, with housing and other interest rate sensitive sectors fueling so much growth over the last year and a half, they have really heavily impacted that. The question on the inflation side is how much of this is really still driven by supply. And I'm not talking about supply chain disruptions. Those have ebbed. What I'm talking about is labor supply at this point. Higher services costs, higher services inflation is really driven by higher wages. My concern is that the Fed is using models. They love their Phillips curve models, and they're using these models built in the 90s when labor dynamics were completely different.
So what does that mean in terms of what NARU is? What does that mean in terms of what they should be doing or should be looking for in terms of employment, and what that will mean for when wages will start to moderate?
It means that they may have to raise a lot more to get businesses to let go of workers. It means that the risk of a policy overshoot is higher. Their estimate of NARU has always been a moving target, but today it may be lower given that people can work remotely, geographies are more fluid, and the fact that we just have this more constrained participation rate.
Laura, chapter 23 of any good Econ 101 book is about the markets. Do you suggest that this central bank, the Fed, is looking at the markets? When I look at bonds, I took a U.S. bond ETF. It's down 22% from its high 2 years ago, and that's better than a lot of others, to be blunt. I'm just fascinated if this Fed, the phrase is blink, not that they'll blink, but they become aware that a 401k has become a 201k?
I think that the Fed is highly aware of what they've done to financial markets. And in fact, they've mentioned that over and over again. This is another key concern, which is that recently Vice Chair Brainerd commented on corporate margins, which actually remain relatively healthy. And if the Fed is looking to slow the economy down and looking to spread some of the pain of that slowing to the labor market, I think increasingly they're looking to spread some of that pain to corporate margins. It's not a good supportive outlook for equities into the beginning of next year. So I think the other question I get asked so often is, have the markets seen their bottom? We're all talking about the risk of recession, but markets still, to me, don't have it priced in.
Well, I look at the priced in part. What do we do after the November 2nd meeting? I mean, I want to get on to December and frankly onto the meeting. I believe it's February 1 of next year. At some point, they have to respond to the markets.
Yeah, I think they would say they're not responding to markets. They would heavily argue that they're responding to the structural lags in their policy going to the economy. But tomato, I hear you. I think the point really is that they're going to have a big challenge messaging that, right? Because every time they talk about holding or talk about backing off their aggressive pace, markets start pricing in rate cuts. And, earlier you were talking about how kind of the Fed has trained markets over the last 15 years to expect a rally at any time. Yeah. And I think this is what they're having to really beat markets up about right now. They're having to put into place a permanently higher trajectory, or at least, a multi-year higher trajectory, because inflation is not going to fit neatly back into their 2% package. Yeah, it may come down from here, but it's going to stay really elevated. This is the fine line the Fed is having to walk, and it's causing them confusion when they're communicating. It's adding to bond market volatility. And all of this is just weighing on sentiment.
We were speaking with Bloomberg's Damian Sassower earlier, and he was talking about how all of this is leading to the strong dollar that's really torpedoing a lot of emerging economies. Do you think that it's important for the Fed to step in on the dollar side of things to offset some of that pain as they combat inflation?
I don't know how they can, Lisa. I think that, for now, the stronger dollar reinforces the monetary policy trajectory that the Fed is taking. And I think there's this other issue. The Fed knows that unilateral intervention isn't particularly effective. This is if they wanted to weaken the dollar at all, it would be a huge change from the sort of unspoken, stronger dollar policy that we've maintained for all this time. At the end of the day, I think they're more focused on what they can control, and they don't feel like the dollar fits easily within that sphere. So to the extent that their blunt instrument can control financial conditions, I think they see what the damage they've done in markets, and they feel like it's part of their move into restrictive territory to hit inflation.
The objective, not the unintended consequence.
Yeah,
Lara, thank you. Lara Rain of FS Investments, and we're all struggling to transition to it. Market participants specifically, Tom, transitioning to a world without the distortion that Lisa talked about for the best part of a decade in fixed income.
All these guests are different. Laura Rahm comes from the crucible of foreign exchange strategy at Credit Suisse, which I really like about her, and that she's really focused on the market linkages here. And I just look where we are. I do recall when the 10-year yield was 5% for a long, long time, decades ago. And the basic operative I'm hearing from the gloom crew is the world's going to end as we know it. I don't buy it. I just don't buy it.
One of the calls of this morning was that call from Tony Rodriguez, who said maybe we've seen the high of the year on the 2-year at about 460 intraday on Friday. The thing is, I heard that about 100 basis points ago in June. I asked the same question. I'd hear from similar guests who would say that was the high of the year, and then here we are 100 basis points later.
Sure. It's hard to game out the highs, and I admire Tony for actually making a call.
Sure.
And being bold with that. So kudos to you for doing that. I think the more important thing that he said was, ultimately, if they stop at 4.5%, it doesn't make a difference versus 4.5% to 5%. If they keep it there for a year, 2 years, that is a reset. It's not necessarily the world coming to an end, but it is coming to an end as we know it, and it already has come to an end as we know it. If you take a look at the negative yielding universe and beyond.
Isn't Steve Major laughing at that, though? The prospect of staying at 5 for years.
He thinks that that's implausible, that it would torpedo the economy dramatically. And he also thinks that the demographics will reassert themselves, older population, shrinking population, et cetera, et cetera. The flip side of that are a whole host of other issues. It's a soup. Nonetheless, you're going to get higher rates for longer, at least relative to what we've seen over the past few decades. And I think that that is a game changer.
I thought you said the drinking population, not the shrinking population.
Would you like to?
No, I just was wondering where you were
going on in your mind.
I've heard there
the drinking
like in the last 5 days, last 4 days, I've heard tomato, and all that.
Who said that to you?
I can't remember, but it's like, you and me. You say Greg's, I say Greg's. You say Marmite, I say Marmite. Let's call the whole thing off.
Not even hearing the difference there, Tom.
There isn't a difference. That's the point.
Okay. That was fun.
No, I just think it's like, what's the good news? I haven't heard the good news. Give me some good news, bad news.
Gas prices in Europe are lower.
That's good news.
But is that bad news is good news, or good news is bad news?
That's good news is good news.
Good news.
Good news is good news.
Yeah.
Thank you.
If the weather stays
and as long as they can build something for next year.
All of that.
Yeah.
Lisa will write a column throwing cold water on the whole thing, no doubt. Jared Woodard of Bank of America's coming up. Looking forward to catching up with him around the opening bow. Future's still positive. Yields just starting to turn higher at the front end by a basis point on a 2-year. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Xi Jinping's power grab in Beijing has led to an historic rout in Chinese stocks. Equities had their worst day in Hong Kong since the 2008 financial crisis. Meanwhile, the offshore yuan fell past 7.3 to the dollar for the first time ever. Traders are concerned that Xi's decision to stack his leadership team with loyalists means more policies that are not market-friendly. In the UK, Rishi Sunak has taken a big step toward becoming the next prime minister. Former Prime Minister Boris Johnson has pulled out of the race, and Sunak has received public endorsements from more than half of the Conservative members of Parliament. Meanwhile, House of Commons leader Penny Mordaunt is being pressed by members of her own campaign team to withdraw from the race. She needs support from at least 100 Conservative lawmakers in order to go forward to the final ballot. A new poll says that Americans favor Republicans over Democrats when it comes to the economy. That maintains a Republican advantage on the issue heading into next month's congressional elections. According to the survey from ABC News and Ipsos, 38% of those polled favor Republicans on the economy, with 24% trusting the Democrats. And Credit Suisse has agreed to pay $234 million to settle a French criminal investigation. That brings an end to the probe into allegations the Swiss bank helped clients stash undeclared funds. Under the terms of the agreement, Credit Suisse made no admission of guilt. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment, that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
We will never.
The new government has got to outline a clear growth plan. Liz Truss's growth plan was based on a single proposition. You cut taxes by borrowing, and somehow that magically delivers you growth. Doesn't matter whether that's credible or not credible anymore, because clearly the markets are not going to allow it.
Philip Lord Hammond, he is the former Chancellor of the Exchequer. Lisa Bramwitz and Tom Keene, John Farrow preparing for British announcements in the 9 o'clock hour, 12 minutes away. Lisa, you mentioned it earlier. Who will be the Chancellor of the Exchequer for the two candidates, if they're two candidates?
I like that. John Farrow is preparing for British announcements. I think that he is trying to actually get away from it more than we are. I think that he's sort of saying, look, they're going to announce it, but it's not going to be the most important thing that happened today.
Clea sent me a love note. She makes it go forward here with all the news and the timing, and basically she said, we have no clue what's going to happen at 9 o'clock. Thank you for Clea for that informative.
Ever-present comment.
Right now, we're going to get a clue here on the equity markets. Gina Martin-Adams joins us knee-deep into the big earnings week. Chief equity strategist for Bloomberg Intelligence barely describes it. I'm looking at a given company. It is a profit monster. They are above where they were in 2019, and their margins have expanded. I thought margins were supposed to contract.
Yeah, well, they are contracting for most of the S&P 500, but for those that are expanding, prices are performing very, very well. You just have to find those needles in a haystack.
Those needles in a haystack. Well, this came up earlier. I know you weren't watching the show, but, you know, Damien was watching it, but you weren't. Okay. And the answer is, what percentage of the SPX is sort of profitable revenue, profitable margins, profitable free cash flow? How teens-weens is that section?
Yeah, we're talking 20% of the S&P 500 now showing actual margin growth, margin expansion on a year-over-year basis. Almost all of it energy or commodity-centric. So you've got energy companies, some select industrials as well, some select materials companies that are still showing margin expansion. But for the most part, the vast majority of the S&P 500 is showing margin contraction. On a net income margin basis, you're talking 9 of 11 sectors now posting lower margins this year than they did at the same time last year. On an operating margin perspective, you're talking 6 of 9 sectors.
So Mike Wilson's been saying you will get the decline when you get the capitulation in the expectations for EPS.
Yeah.
We've gotten some capitulation. I don't want to call it the C word, but we've gotten definitely some downward revisions and then some more downward revisions. When can we call it capitulation?
Yeah, it's really difficult to say on earnings because typically actually what happens is your earnings capitulation happens well after price bottoms. So price bottoms are made on sentiment, not on earnings capitulations. Earnings from the analyst community usually face their greatest pace of downward revision momentum after the price has made its low, if you look at long-term history. But let's be honest, this cycle is nothing close to any cycle that we've seen in recent past, so why would it all operate perfectly in line with some kind of playbook? I think what you're seeing, frankly, is analysts really concentrating the vast majority of their effort on the quarter to come, not on the longer-term outlook, because the longer-term outlook is so uncertain. In an environment in which inflation is just now slowing and has been extremely robust, so much more robust than any time in the last 40 years, inflation coming down is having some pretty interesting and potentially very material impacts on the margin outlook. Weirdly, even though we all believe that we're in or headed for recession, analysts are actually forecasting that inflation dynamic to work in the form of a margin low right now with margin recovery into 2023. I don't
understand this. I thought that's where you were going with this.
Yeah.
How could we lead to margin recovery if the Federal Reserve themselves are basically pushing to have margin compression? If that's what everyone wants to see, if the consumer has to feel the pain, shouldn't companies as well?
Yeah. They do feel the pain, but they've felt it less than consumers. They felt it more this year and will feel it less than consumers next year, is the analyst forecast. Let's take financials as kind of a microcosm. Financials' point of greatest pain is when the yield curve is at its steepest deceleration, right? We're at this point in time where the yield curve is enormously inverted. If the yield curve becomes comes to a positive spread into 2023, what does that do for financials margins? Financials margins going into 2023. Companies that are cutting cost of labor right now will experience better margins into 2023 because of that dynamic. So this is a very different kind of environment than I think is popular consensus right now is going into 2023. Corporate earnings will get creamed. Corporate earnings have actually suffered a great degree of slowdown in 2022. The question is how much more they continue to slow into 2023, or if we actually can reach some sort of bottom in the winter months that we can start to recover from later in 2023. And this is, I think, really contrary to the narrative that's running around the market right now. It's what we see in analyst expectations. You know, there have been recessions in the past where earnings have only fallen at a single-digit pace, and that's pretty much what analysts are anticipating.
What does the pricing power debate look like right now? The unit dynamic and the price dynamic at the revenue line?
It is extremely variable by industry and sector. I think you can't talk about the S&P 500 as one big entity.
Can you even talk
right
about
now.
One sector? Do you have to go in and partition profit makers and zombies?
You almost do. You do. Because frankly, you've got such extraordinary distress emerging in the inventory cycle, which is really also behind a lot of this weakness for, say, semiconductors and retail, which are the areas of greatest distress on the inventory lines, along with maybe autos coming into 2023. There's a tremendous amount of margin pain and inventory excess that we have to work through.
So what do you do when you see
sectors.
that? My answer is you cost rationalize. That's just got to happen.
Yep, and you're starting to see that. I mean, we've seen layoffs. We've seen announced layoffs. We've seen a lot of these sectors talk about, retailers even talking about how much labor they need into the holiday season. You've seen the tech companies laying off people. Autos have announced layoffs coming already. So you're starting to see this in these segments. Now, the interesting thing is they're offset by this unique dynamic of services industries actually finally getting some traffic.
Right.
So services industries get some traffic this year. That provides some basis of support for services industries. Let's take the airlines as an example. Suddenly businesses are traveling again. You've got business travel coming back online. Their dynamic looks a lot different than an inventory-focused goods company.
That was depressing.
Well, no, I mean, I don't know. Maybe not, actually, because if they actually are going to see margin expansion, maybe the pain has been in. It's an interesting counterintuitive kind of play. Gina Martin, thank you. That was great.
We got to come back. I want to talk to you about alpha and beta, and are we back to a stock picker's environment? Gina Martin Adams and her team at Bloomberg Intelligence. I really can't say enough about the service. Look for it on the Bloomberg terminal, and it's on the equity side, and also she never talks about it, of course, on the fixed income, the debt side as well of corporations in America. Joel Levington and others there doing a great job. What a Monday! What an odd Monday.
On a really strange, in a strange week, given all of the data coming out, the ECB rate decision, the Bank of Canada rate decision, which is often a front runner to what happens next week for the Fed. 2 weeks to the U.S. election, then with all the turmoil in the U.K. And a total regime shift in China, at least what we heard over the weekend.
And maybe a regime shift in the United Kingdom. Stay with us on radio and television in the coming minutes. Perhaps a new prime minister in the United Kingdom. Good morning.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. No one covers the world like Bloomberg.
Because Trussonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Live from New York City this morning. Good morning, good morning. Adding to the rally of last week on the S&P 500, up by about 0.75%. We'll go stateside in just a moment. We'll start in the UK, where it looks like Rishi Sunak is the country's next Prime Minister. The countdown to the Open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York City this morning. Good morning. We start the morning in the United Kingdom and head over to Lizzie Burden in London. Lizzie, awaiting the next Prime Minister, and it looks like we've got an answer.
Yes, Rishi Sunak is going to be the fourth Prime Minister in 3 years in the UK. We've just had a statement from Penny Mordaunt. She says, we have now chosen our next Prime Minister. This decision is a historic one. It shows once again the diversity and talent of our party. Rishi has my full support. This race had dragged on to the very last moment. It is literally the last moment, and with it seconds to go, she has tweeted. But it seemed, John, that she just did not have the backing of the parliamentary party. Rishi Sunak had got the majority of MPs, and it was looking like Penny Mordaunt was going to face exactly the same problems that Liz Truss faced in not being able to get her agenda through Parliament. And at the very last moment, it was clear that she could no longer profess to be the unity candidate in this race.
Lizzie, the price action pretty clear. Yields down by 20 basis points at the front end on a 2-year. That's been the story all through the morning. Sterling outperforming relative to its peers in G10 against the US dollar, unchanged on the session at 113. Danny Berger joins us now as well. Danny, talk to us about policy here, what we can expect from Rishi Sunak, formerly the Chancellor and now the Prime Minister.
I was just about to say, John, we don't have a clear outline of where he goes from here, but it's pretty clear where he will go, considering he was just Chancellor. Now, it's likely that this will usher in a new age of austerity, something that Jeremy Hunt has compared Rishi Sunak to the tough decisions that Maggie Thatcher made in the 1980s. The emphasis has been one of balancing the books. So it's about higher taxes. It's also about less spending. But of course, they face a calamitous economic environment that structurally will leave the UK in a very difficult situation. So at the moment, policy, it's about playing it safe. It's about stability, John.
Lizzie, let's talk about what comes next now. We were expecting a fiscal statement at the end of this month, in the next week. We were expecting a Bank of England rate decision in early November. How do the events of today shape the events still to come?
Well, I think part of the reason that Rishi Sunak, the main reason that he has been is being anointed by MPs as the Prime Minister is because of his economic experience. Therefore, he knows the fundamental importance of reassuring the markets now, first of all, that Jeremy Hunt is going to remain the Chancellor, and secondly, that this medium-term fiscal plan is going to go ahead on October the 31st, ahead of that BOE decision on November the 3rd. As Danny says, he's going to face, in the words of Jeremy Hunt, the Chancellor, eye-wateringly difficult decisions between spending cuts and tax rises, but he still does need to plug this £40 billion hole in the public finances if he's going to reassure the markets.
Danny, I have to say, for a lot of people in the United Kingdom, they're very focused on who the next leader is. In the United States and beyond, it was all about the market of the last couple of weeks. Danny, do we just move on from the gilt crisis, if you can call it that, of the last month or so?
Well, Kit Jukes this morning was talking about the idea that he would be selling volatility now, that we're going to move away from an environment where we're just lurching from headline to headline. So yes, volatility might be lower, and you can hear around here volatility is still very present with protesters still screaming in the background of me, John. But it doesn't mean that UK gilts will go higher from here. It doesn't mean that the pound will strengthen. They still face the problem of, as Lizzie says, this hole in the budget of higher and more expensive energy and rates that are set to rise, perhaps less now than they were when we had Truss at the helm, but they still need to move higher to fix the structural issue of a weak pound.
Just hearing from the 1922 committee chair, Graham Brady, as we expected, Sunak is the sole candidate in the Tory leadership contest. Rishi Sunak is the leader of the Tory party. As such, Rishi Sunak is said to become the Prime Minister of the UK. Lizzie, will hear from Sunak. He will address the MPs, the Tory MPs at 2:30, I understand, 2:30 local time. What are you expecting from the rest of today?
Well, all the plans have been blown out of the water. We could get a statement from Rishi Sunak, of course, as he's going to want to reassure the markets of what's coming next. We're going to find out who's going to be in his cabinet. As I say, we're likely to get Jeremy Hunt continuing in his role as Chancellor. Will Grant Shapps stay in the cabinet? Will he actually stay as Home Secretary? What you need to see from Rishi Sunak now is reaching across the huge gaping divides in his party to build party unity now. He had the backing of big names like Dominic Raab, Boris Johnson's former Deputy Prime Minister. In fact, that was a significant moment in all of this when he chose to back Rishi Sunak over Boris Johnson, who of course dropped out. Will there be roles for others like the former Chancellor Nadhim Zahawi? Very important in terms of not just party unity, but political stability, and then of course the economy too.
Lizzie, thank you. Lizzie Burden, and number 10 Downing Street. Danny Berger over in Westminster. Rishi Sunak confirmed, set to become the next Prime Minister in the UK. After a month of following this mess in the market, joining us now is Invesco's Brian Levitt and Jared Woodard of Bank of America. Brian, are you confident you can just ignore what's happening in the UK now and move on?
I don't think we can ignore it. I think we can have a little bit more comfort. I mean, what we've seen is a return of the bond vigilantes for the first time in a very long time. And so the message to Liz Truss was, no, we're not going to increase. We saw what happened in the UK gilt market, what happened in the pension system, the pension funds. This does remove some of that uncertainty, which is certainly good, for lack of a better word. But the UK still has challenges. I mean, it's still a very weak growth environment, high inflation. So there's still challenges to address, but this does start to remove one form of policy uncertainty there.
Jared, what's the lesson from the last month?
Well, John, I think it's a great piece of evidence that we're undergoing a massive shift right now from a 2% world, 2% inflation, 2% central bank targets, and so on, back to the 5% or so world that we were familiar with for most of the 20th century. Bond volatility is evident in the UK, but it's also evident in the United States. Currency volatility around the world. Look at the yen. This is a shift that's incredibly profound. It's slow moving. It won't be done soon. I think it has profound implications for asset allocation. And the news out of the UK is just more evidence that the environment from, say, the year 2000 until 2019 or so, well, that was the aberration. I think we're returning now back to something much different.
Jared, I heard from Chris Verona of Strategas earlier this morning. He said to us and the team at Bloomberg Surveillance that the first scalp of this new market regime was Liz Truss. Then we started to discuss who's next. Jared, who's next?
I don't want to make a political prediction, John, but I think one scalp you've also seen are 60-40 investors, are growth investors who've all become, I mean, by our estimate, there's about $70 trillion of assets in the world today priced for this 2% regime. Those valuations have to adjust. Those, cash flow and discount assumptions have to adjust. And for us, that requires lower market multiples, more volatility, both in the macro and the market side, and a shift in asset allocation that we have yet to see.
I wouldn't expect you to make a political call, maybe a policy call. Jared, I was thinking more along the lines of, is the BOJ the next to capitulate on their policy? We've seen the markets return to providing some form of discipline to bad policy. Is yield curve control in Japan bad policy?
When you look at the yen, it's hard to avoid the question whether the Bank of Japan is going to continue to run basically solo as the rest of the world tightens and deals with problems from inflation. I would be very shocked if a year from now it wasn't clear that inflation in every country turned out to be much more difficult to contain than I think most policymakers still are prepared to address. And that means for investors, more volatility in the bond market, a rethink of asset allocation, and a shift toward assets that can produce cash flows now rather than relying on low discount rate assumptions for growth in the future.
Brian Levitt, where do you look for policy capitulation next?
I actually think you may start to see it from the U.S. Federal Reserve. I mean, we've already priced in a 5% terminal rate. So I'll go the other way on this. Yeah, you might see further tightening in places like Japan, places that need to catch up. But the U.S., we already have a 5% terminal rate. And the economy, if you look at financial conditions, if you look at ISMs, is heading towards contraction, which is below trend growth and decelerating. So we've got the timing messed up a bit here in the United States. Typically, when you're in a contraction, the Fed is beginning to ease. We don't have that right now, which has certainly been challenging for markets. But in my opinion, as inflation is going to start to come down, you're going to see the Federal Reserve have to hit a pause button. And what you're likely to see is markets start to get ahead of that pause. So I actually think it's a positive capitulation that's likely coming over the next months.
Brian, is that what we're already seeing Friday and into today's session as well, off the back of a Wall Street Journal story that told us everything I thought we already knew? They said the following: Federal Reserve officials are barreling towards another interest rate rise of 0.75 percentage point at their meeting November 1 to the 2nd, and are likely to debate when and whether they should signal plans to approve a smaller increase in December. Now, Jared, the conversation we're talking about now is the step down. It was the pivot, then it was the pause, and now it's the step down from 75 to 50 and maybe to 25. Jared, is that bullish?
I don't think it's bullish yet. Our view at Bank of America is for a peak of 5% in the Fed funds rate in the first quarter of next year. And I always tell investors it's very easy to get too ahead of yourself here, because the effects, as the Fed is always at pains to point out, the effects of tightening policy take a long time to feed through to the real economy. We haven't yet seen, I think, the move in credit conditions and financial conditions that we will see if the Fed gets all the way to 5%. And you have to allow time for that to filter through to the real economy, to corporate earnings. We have yet to see a really bad quarter of corporate profits. And we haven't seen the kind of investor capitulation. All these conditions are missing to give us a big low in the market and to coincide with a pause in the Fed.
Brian, to Jared's point, and it's an important one, we've priced in the hiking cycle. We haven't priced the weakness, the economic weakness associated with it just yet. Are you jumping a couple of steps too far?
Well, my sense is to say that, it doesn't happen immediately, but I would use 81 as an example. Inflation peaked in 1980. You had a recession in 81. Some more challenges for the market through that period. But if you had invested in when inflation peaked, in fact, if you had invested when inflation peaked in any of the cycles, you were quite happy a year or two later. So it's not to say that we've hit bottom. There's some near-term challenges here. The question is, are you optimistic about stocks over, call it, the next 6 months to 24 months? And I would be. with regards to the valuation adjustment, look, we came into the year at 30 times earnings. The market believes, or the analysts believe, earnings get to around 220. That has us today at around 16 times forward earnings. That's not overly expensive. Now, will earnings be hit in a recession? Yeah, they'll come down, call it 10, 15%, but what multiple are you willing to pay on that? Even if you fall to 180 on earnings per share, what are you willing to pay on that? If you're willing to pay 17, then maybe we've got to see 3,200. If you're willing to pay 18, 19, then maybe we're starting to put in a bottom. But the key point is markets tend to do well after inflation peaks, even if there is an earnings recession in the interim.
Hey, Brian, stick with us. Brian Levitt, Jared Woodard. After the latest news came through from the United Kingdom that Rishi Sunak is set to become the UK's next Prime Minister, we can turn from the political certainty, if you can call it that, in the UK, to the uncertainty on the horizon in the United States. Coming up, President Biden with a message for American voters.
If you're worried about the economy, you need to know this. The Republican leadership in Congress has made it clear. They will crash the economy next year.
Counting you down to the midterms, that conversation up next.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
If you're worried about the economy, you need to know this. The Republican leadership in Congress has made it clear. They will crash the economy next year by threatening the full faith and credit of the United States for the first time in our history, putting the United States in default unless we yield to their demand to cut Social Security and Medicare.
President Biden warning of the economic consequences if Democrats lose control of Congress. Speaker Pelosi defending her party's pandemic spending, saying she has no regrets.
No, absolutely not, because that was necessary for people to survive. The point is that when you reduce unemployment, it's inflationary. That is a fact. The fight is not about inflation, it's about the cost of living.
This is the latest polls show Republicans gaining momentum on key issues with less than 3 weeks ahead of midterms. Bloomberg's Anne-Marie joins us now from the White House for more. AMH, change the subject, change the topic, was the message from Speaker Pelosi.
That's right, and they're going to be talking about the economy. And why is that, Jonathan? Because you just showed the latest poll, but it's been poll after poll lately that the economy is top of mind for voters. You're going to hear more of that rhetoric today. The president will be speaking at the DNC headquarters. In that last speech, he called it mega MAGA trickle down, and he's likely going to say that again. But when you look at the New York Times Siena poll, Jonathan, an issue like abortion that the Democrats really wanted to get the vote out for, that is starting to lose some momentum on likely voters. It says the economy, 27%, inflation, 18%, and then abortion, 5%. And that same poll shows that those voters plan to vote Republican. So a lot of the analysis that the House for sure will go red. Greg Vallier today in AFG, in their perspective and their final prediction, says they're just not sure how big of a wave is going to be, but it's going to be a red wave. He also thinks the Senate will go red. But Cook Political Report says that is still a toss-up, but many people are starting to lean that potentially they are able to pick up that one seat.
The sprint to the midterms, I guess, starts right now. AMH, down in D.C., thank you. Brian Levitt, Jared Woodard, back with us. Brian, let's start here. You've been thinking about it. You've been researching it. Do politics matter? Yes or no?
Well, politics tend to not matter nearly as much for markets as investors suspect it does. I mean, start with the economy. If you look at the median real GDP of the U.S. economy back to 1946, it's very similar, single-party rule on either side versus divided government. If you look at markets over time, the markets tend to do well regardless of the combination of government. I mean, the long-term advance in the U.S. market has done well across many different administrations and different combinations of government. So it doesn't matter to the extent where investors are always saying, well, I'm going to get out of markets if this politician wins or loses. I strongly advise investors against doing that. Now, are there some challenges here? Yeah, I mean, you hear President Biden talk about raising the debt ceiling. I suspect we ultimately will do it, as we have in the past, but certainly create some policy uncertainty in the near term, which markets don't love.
Jared, your take?
We know that historically investors appreciate when there's a little bit of friction in Washington. Too smooth of a path, too much control, by either political party can lead to some pretty aggressive, policy entrepreneurialism, let's say. And I think it's no secret that some of the massive stimulus that we did last year in particular may have exacerbated the problems we're seeing now when it comes to inflation. So a bit of let's say gridlock, or at least a little more friction, a little more negotiation, I think is likely to be greeted by investors as a big positive next year.
Brian, when I hear people say things like politics don't matter, this is the data, look at the post-war data, I wonder if the post-World War II data says more about the American century than it does anything else. And as that century comes to a close, and you start to see the emergence of China solidified by the actions of Xi over the weekend, whether the policy decisions, the politics start to matter a little bit more in the way they didn't in the previous 50, 100 years.
No, I don't suspect they do. I'm not sure that we're ready to give up the mantle of, the world's great economy superpower. China's obviously grappling with their own issues right now. And markets over time, I mean, if you think about it, Jonathan, we look in hindsight, the 20th century, 2 world wars, a Great Depression, a dozen recessions. It's not as if it was easy going. Markets don't trade on good or bad. They trade on better or worse. And so you have to ask yourself, are things likely to get better relative to expectations over the next couple of decades, irrespective of who's running the executive and legislative branches of government?
Jared, do you think they are set to get better?
Well, I do think that the resurgence of some measures, especially in the United States recently, to bolster our industrial base in this country, to boost energy production, to the Semiconductor Chips Act and these kinds of measures, to preserve competitiveness and to raise productivity. These can be incredibly powerful. They're incredibly positive. A lot of folks know that some of the big innovations in technology of the past few decades, think about smartphones, were all funded by industrial policy in the Cold War designed to produce some military innovations, and the second order and third order effects of that gave us a lot of incredible technology. If we can pursue that sort of agenda today, whether it's with regards to China or energy challenges, there's a lot of knock-on effects to productivity that can be incredibly bullish.
Well, Jared, what's the energy opportunity right now after the monster rally we've had in fossil fuels and those producers in the energy patch, the likes of Exxon, the other oil producers as well, elsewhere?
John, I think there's deep value in natural resources, energy and miners. You know, if you look at clean energy stocks today, they're trading at 27 or 30 times earnings. If those companies succeed, it requires copious amounts of raw materials, lots of energy to power the grid, and the energy stocks and the mining stocks that are necessary for clean energy stocks to work, those are trading at 8 times. So I think despite the rally this year, most investors don't own that much in energy. You're going to need lots and lots of fossil fuels as a bridge to the future, lots more mining, lots more raw materials, and those stocks are, I think, trading at fantastic valuations.
Brian Levitt, final word here, sir.
My final word is that we're going through a very, very challenging environment because it's a unique pandemic cycle. And I would advise investors not to extrapolate this as being the rest of our lives. We had a pandemic where we shut down the global economy. We provided too much stimulus across both administrations. It's created an inflationary environment, policy tightening. We're trying to get through that. The good news is long-term inflation expectations are not out of whack. The Fed does not appear to have lost credibility. We will get through this. Right now, we're contracting and tightening. That creates some challenges. A recovery will commence next year, and investors tend to do well investing in that recovery.
That's the constructive view. Brian Levitt, thank you, sir. Alongside Jared Woodard, to the both of you, awesome, as always. About 7 minutes away from the opening bell, equity futures up by 0.5%. Coming up, the morning calls, and later, investors gearing up for a big, big week of tech earnings. Stock's Emily Hill expecting a strengthening dollar and rising rates to fuel further downside in equities. That conversation coming up shortly. Your opening bell, just around the corner.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Looking to build on the rally of last week. Equity futures up by 0.4% on the S&P and the Nasdaq. Pretty much unchanged. That's the price action. Here are some morning calls. First up, Wells Fargo downgrading FedEx to equal weight, expecting weaker revenue growth as the company pivots towards cost-cutting measures. Next up, Citigroup initiating coverage on Harley-Davidson with a neutral rating, seeing macro headwinds weighing on demand for at least another year. And finally, Bank of America downgrading Meta to neutral ahead of Wednesday's results, seeing mounting headwinds to upcoming earnings estimates. That stock is down by a little more than 1%. Coming up on this program, Alphabet and Microsoft earnings on deck. Stock's Emily Hill expecting a strong dollar to play a big role in big tech results. That conversation coming up with equity futures on the S&P 500 up by around about 0.4%. Your opening bell to kick off the trading week is just around the corner.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Live from New York City this morning. Good morning. About 22 seconds away from the opening bell. Equity futures elevated by about 0.5%. Last week, monster week of gains. Biggest week of gains since June on the S&P 500. Looking to add to it right now. On the Nasdaq, basically unchanged. The Nasdaq helped out by a big move lower in bond yields on Friday. Switch up the board and get to the bond market. Yields look like this. Your 10-year yield was lower. Now it's basically unchanged. 422.55 on a 10-year. In the FX market, the numbers out of Europe today were dreadful. And if I told you a few months ago, let's call it 6 months ago, the start of the year, say, that you'd get some PMIs in the 40s in Europe, and that same week, you'd get a 75 basis point hike from the ECB, you would not have believed me, but that's what we're set to do on Thursday. Futures then were positive going into the opening bell. Coming out of it, the stock market is elevated on the S&P 500. About 25 seconds in, we are positive 0.4%. On the Nasdaq, basically unchanged. The equity rout in China is what we started the day with, though, and it bleeds into the US Open. US-listed Chinese tech stocks under pressure ahead of a busy week of earnings from some of the world's biggest companies. Ed Ludlow off the back of the events in China over the weekend.
Yeah, good morning, Jonathan. We're down 11% on the NASDAQ Golden Dragon Index. That is a gauge of US-listed Chinese technology shares. Look at four names in particular. Pinduoduo, Alibaba, JD.com, Baidu, they make up 33% of this index. There are two concerns, right? First of all, from a policy perspective, that after consolidating power, Xi Jinping will not be supportive of private enterprises' recovery in an economic sense. The second line in that is also COVID zero policy, right? That having consolidated power, it kind of hits the hope that we will see some support for an economic reopening. Overnight, I was paying close attention to the Hang Seng Tech Index dropping 10%, its biggest decline since March, closing at the lowest level since 2016, taking its year-to-date decline beyond 50%. Basically, John, tech in China has firmly established itself now as the laggard for that sector globally from an equity market perspective as well. We also got a slew of economic data overnight. A mixed bag. The economy grew faster than expected in the third quarter, but retail sales weak and the property sector continues to be a concern. China home prices sinking for a 13th month in September. That market remains fragile, and it's going to be a major challenge for Xi Jinping going forwards.
Big challenge for us in this market as well. Ed Ludlow, thank you, sir. I mentioned this a little bit earlier this morning. I think it's worth repeating. There aren't many things you can be confident of at the moment, but I think we can be confident of saying the following. We're more likely going to be talking about the events over the weekend in China in 10 years to come than what's happening in Westminster right now, without a doubt. And you can see that reaction in the equity market for Chinese tech stocks. That's speaking loud and clear. And the currency weakness as well is a big, big deal we'll stay on top of through the week. 1/3 of the S&P 500 reporting results this week. Bloomberg's Taylor Riggs takes a look at the earnings still to come. Hey, Taylor.
And John, so we've gotten about 100 earnings within the S&P 500 reporting, and about 70% of those have actually seen an improvement relative to consensus. So you're a little bit below the 5-year average on that statistic, but I think that overall everyone would say that this certainly has not shaped up to be a horrible season so far. As you can see there, year-over-year earnings growth a little bit light, but sales is an improvement year-over-year. And then again, relative to estimates on both the bottom line and a little bit here on the top line, there is some improvement. We're going to get a lot this week, John. Like you said, it's going to be a big week. Tuesday and Thursday are sort of the biggies when you think about Microsoft on Tuesday, Apple, Intel, Amazon on Thursday. So that will skew it. But big tech, and of course, given the weighting within the S&P 500, certainly going to give us an idea of how we're going to be wrapping up at the middle portion, at least, of this earnings season. What I love about earnings season and the quarterly season is the back focus on the fundamentals, John, and that is what is driving the market. Remember that we're down 20% year to date on the S&P 500. But since quarterly reports really started in earnest about 10 days ago, the price action is still up actually about 2.3% on the S&P. So again, a refocus here on the fundamentals, on the actual companies here, and maybe that will start to drive some of the price action.
It's Taylor Riggs, thank you. Wonderful as always. Catch Taylor at the close to break down some of those earnings later this week. BNY Mellon's Alicia Levine saying their valuations for big tech still have further to fall.
High growth names, when they stop growing high growthly, get not only an earnings downgrade, but you get the multiple compression as well. So to the extent that you have stocks that are still trading at 40 times next year's, the tech names are still too high.
Baba Stocks' Emily Hill saying further downside for stocks, writing the following: the current challenging environment is separating the sheep from the goats. We may not see the true impact of a strong dollar, higher interest rates and rising labour costs until the fourth quarter. The S&P is likely to retest the lows in early 23. A retest of the lows in early 23. Emily, fantastic to catch up with you. You said on valuations, stocks are not yet undervalued. What will guide that ultimate conclusion?
Well, the S&P 500, at least large cap stocks, are trading at 15.6 times forward earnings. And so that's a reasonable value, but they're certainly not a huge bargain. So I think what we're in the middle of right now is our second testosterone-driven bear market rally. And I think there is still a ton of liquidity out there, and the market is looking for any signs that the Fed might pivot and has latched on to those. The market has latched on to those recent slightly dovish indicators by some members of the Fed. And so I think we're in the middle of another rally that could possibly continue towards the end of the year. Now, this would happen if we don't see some of the global headwinds that we're all well aware of reflected in the earnings reports this quarter. So it may take until fourth quarter reports for the downturn in some of these big growth stocks to actually come to play.
Emily, I'm with you. We had the pivot, then it was the pause, and now it's the step down. This conversation about going from 75 to 50 to 25. I read the Wall Street Journal article, like pretty much everyone else who read the Wall Street Journal article, and I saw a bunch of quotes that I've already read from several Fed officials. Not much there. But Emily, I did think, is there something to learn from how the market responded to it? Does that tell you something about positions being caught offside, that maybe we were leaning too much to the one side of the boat, if you will? Is there anything to learn about how we responded to that story on Friday?
You mean leaning too
bearish on equities, too bearish on bonds?
Well, I think part of the issue is that we've seen expectations for earnings decline by more than they did in the early stages of the pandemic. So the bar is quite low, and it's not going to be difficult to get over that bar. It's better than a dumpster fire, and that's apparently positive. So the answer is we may be leaning a little bit too on the bearish side, but I think a lot of this optimism is unwarranted. And I just think there's a huge amount of liquidity out there and people just looking for, we still haven't seen good prices in large cap US stocks.
Mike Wilson called for a tactical bullish rally last week. This is what he had to say after the weekend. Last week's tactical bullish call was met with doubt from clients, which means there is still upside. Falling inflation expectations can lead to lower rates and higher stock prices in the absence of capitulation from companies on 23 EPS guidance. I keep hearing from the equity bears, Emily, that weakness they expected could come maybe in the next quarter, so you hear from these companies in early January, in early 2023. What is it about the view that I think really started in the summer that we'd get this capitulation on earnings, and we've been pushing it back out and further out, and the earnings are starting to come through for Q3, and I hear it again. Yeah, no weakness just yet. You're starting to see cracks, but the real weakness you'll see in 3 months' time. What is it about 3 months' time that we'll see that real weakness?
Well, Mike Wilson is hedging a bit, and and perhaps I am as well. But I do think, we had a very strong labor market. We've got strong consumer demand that is taking a while to decline. We're starting to see that now. We're just starting to see house prices decline. So some of the factors out there that will negatively affect earnings haven't really come into play. And so Mike Wilson's thesis is that we're going to get a tactical rally up to 4,100, maybe even 4,200, and that it's and it's actually a tradable rally. But once all of these factors do begin affecting large U.S. companies, then we're going to see the true earnings carnage in the fourth quarter. Now, I am not as bearish as he is, but I think that he's often, if not usually, right. And it may be that he just wants to defend the thesis that he's put forward for the last year and a half. But I think I'm on his side here.
He seems to have a crystal ball that I don't have, and it's still working based on the call of last week and the rally we had last week too. Emily, wonderful to catch up with you. Emily Hill there on the equity market, and Mike Wilson's view of the world as well from Morgan Stanley. Here's the view of the market right now. Last week, biggest week again on the S&P 500 since June, and we add to it on the S&P up 0.8%, 3783 on the S&P 500. The Nasdaq comp up by almost 0.1%. Coming up on this program, world leaders warning Russia about escalating the war in Ukraine.
They have chosen to be Western, they've chosen to be democratic members of the European family, and we have to defend them as long as that's what they wish to be.
That conversation up next. You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
What are the moonshots at Amazon that are capturing most of your time and attention?
Well, we have a unique way that we look at big new investments, and I'm not sure it's right or wrong. It just happens to be our way. And we ask ourselves when we're considering something 4 questions. We ask, if it's successful, can it be big and move the needle at Amazon? Is it being well served today? Do we have a differentiated approach? And do we have competence there? And if not, can we acquire quickly? If we like the answer to those questions, we'll go pursue it with a single-threaded team that isn't distracted by the rest of the business.
When it comes to the stock, it has fallen significantly. Do you think investors are missing something, or has tech just been overvalued?
I have never tried to predict what the stock's going to do. And any time I've tried to a little bit, I've been wrong. I do really believe that in the short term, the stock market tends to be a voting machine. In the long term, it tends to be a weighing machine. We have a concept we talk about a lot at Amazon, inputs and outputs. and the ultimate output for a company is share price, and then other big outputs are free cash flow or profit or revenue. You can't really manage the outputs. You have to manage at the input level, and that's where we spend all our time. And so if you do the right things for the business long term, things tend to work out. I think we've had very good returns for investors, and I expect that to be true again.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. This is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
They have chosen to be Western, they've chosen to be democratic, members of the European family, and we have to defend them as long as that's what they wish to be.
Russia's defense minister calling counterparts saying Ukraine is preparing to use a dirty bomb. Western leaders rejecting the claim, with the US Secretary of Defense Lloyd Austin tweeting the following: I spoke with the Russian Minister of Defense on the phone. I rejected any pretext for Russian escalation and reaffirmed the value of continued communication amid Russia's unlawful and unjustified war against Ukraine. The team coverage starts right now. Bloomberg's AMH back down in DC alongside Maria Tadeo in Brussels. Maria, talk to me about the phone calls that took place over the weekend.
Well, Jonathan, it is very interesting because you did see representatives of the United States, the United Kingdom, and the French on this phone call with the Russian Defense Minister Shoigu. Now, we haven't seen that kind of diplomacy in months. In fact, the diplomatic channel in many ways is dead between the West and the Russians. Having said that, when you look at the content, well, not a lot of detail, but also nothing new. They still say you are the one that's escalating. Of course, the Ukrainians deny the fact that they plan on using any type of ammunition to self-sabotage and escalate the war on the ground. And the Russians continue to say the problem here is Ukraine. What I would note, which to me was more important, in fact, more relevant, over the weekend, a speech by Emmanuel Macron yesterday from Rome, in which he said the Ukrainians ultimately will have to decide the time and the terms of this war. So it does seem to me that a lot of the officials here in Europe still believe we're far off from a diplomatic solution, and this war is still in a very active phase.
AMH, we talked about the midterms about 20 minutes ago. Can you discuss how this is playing out on the campaign trail ahead of those midterms?
It's a great question, Jonathan, because last week we heard from Kevin McCarthy, the House leader for the Republicans. He is set. If there is this red wave, especially in the House, he will be the speaker. And he had said that this next Congress, there will not be a blank check for Ukraine. He said there's going to be Americans that are sitting around. They're going to be potentially in a recession. They're going to be concerned about rising costs of gasoline, of food price, and their rent. And there's not going to be this blank check for Ukraine. This is something that many of, I would say, core Republicans, like you have Mitch McConnell, really wanting to make sure they are showing that united front. For a while, foreign policy when it came to Russia's invasion of Ukraine and making sure the humanitarian, financial, and military aid in terms of weapons, tens of billions of dollars being sent to Ukraine, there was a lot of bipartisan support. Potentially, what you're hearing from Leader McCarthy is that there is going to be some potential new members of Congress that are not going to be on board with that.
Maria, is it playing out in quite the same way in Europe?
Look, it's a very good question because, of course, by now everyone knows the war in Ukraine, not just a war, but the reconstruction of this country, the damage that's being done to the east of Ukraine is going to cost billions. Some even suggest you're getting close now to $1 trillion. Tomorrow there is a conference for the reconstruction of Ukraine that will happen in Berlin. It's the German Chancellor Olaf Scholz who will head this. But now this is bringing up a debate which was put to the side. But I predict this is going to be a big topic here in the European Union going forward, which is the cost is massive. It's enormous. What do we do with the Russian frozen reserves? Should we use that money to pay for the reconstruction and the war, considering, by the way, that for a lot of Europeans, they now see this inflation manifesting pretty much on everything, across everything, every day. So the money question definitely gaining momentum also in Europe.
Maria, can we finish on the good news? The good news is out there and it's the weather. This from Javier Blas a little bit earlier this morning. Unseasonably mild weather in Europe continues to push down gas and electricity prices. Maria, we can joke about the weather, but how important is that?
Well, this is everything. I mean, it's not a joke. I was walking, by the way, with a sweater today in Brussels at the end of October. That is unheard of. Yesterday was a pretty hot day, I have to say. And for a lot of European, diplomats and officials, this is the key. They really believe if the weather can hold on like this for 2 weeks, there really could be a game changer. And I can tell you, a lot of the diplomats that I know are praying to God, any God, that the weather stays like this.
Maria, thank you. Maria Tadeo, over in Brussels, AMH down in DC, to the two of you. Absolutely wonderful, as always. On the S&P 500 right now, about 18 minutes into the session, we're up by 1% on the S&P. On the NASDAQ, up by around about 1/10 of 1%. So the rally continues. I talked about the weak data out of Europe a little bit earlier this morning. The PMI's in the 40s, and the ECB still expected to hike 75 basis points this Thursday. Just got some PMI data out of the United States. With those data points, that news, here's Mike McKee. Hey, Mike.
John, we have some really bad news from the PMIs in the United States. This is the S&P Global PMIs, used to be market. We talked about how bad the British PMIs are. Well, the U.S. ones are worse, a couple of them. The manufacturing PMI comes at 49.9. That's down from 52. So we've gone into what is theoretically a contraction number. Services, 46.6. This is the one that was holding up, and it has fallen significantly. The UK services PMI was 47.5, better than in the US, and the US composite 47.3. That's just a tick higher than the 47.2 in Great Britain. So while Rishi Sunak has a big job ahead of him, Joe Biden's got some problems as well. This week, we don't get a lot of data that will be definitive for the Fed, which meets next week, but we do get some idea of how people are feeling about it, because we get consumer confidence numbers from the Conference Board on Tuesday and the Michigan sentiment numbers on Friday. The biggest numbers of the week are going to be the ECI, the Employment Cost Index, and the income spending numbers, and PCE inflation on Friday. Those are the ones that might move the markets, if not the Fed. John, I do have one bit of bad news for all of your audience and your investors out there. It appears a recession has moved significantly closer.
Brutal.
The Philadelphia Phillies are in the World Series, and every time a Philadelphia team has won the World Series, we have had a financial crisis.
Are you saying the choice is then between supporting the Phillies or the Astros? And I was told all through this morning that everyone hates the Astros, Mike. So for the economy's sake, do you have to support Houston?
The economy would suggest, based on past history, that you have to support Houston. Maybe some people will hope for a break in that string, but it doesn't look good when you look back.
I still don't get it. Yankees fan are going to support the Phillies, Mike. Is that right?
Well, they're different leagues, so Yankees fans could support the Phillies.
So they'll do that.
Yankees fans hate the Astros because they cheated in 2017.
Okay, but they keep on winning as well.
Yeah.
I get it. Mike McKee, thank you, sir, as always. The PMIs, ugly in the United States. Will they be confirmed by the ISM? And Mike's covered this a few times for us over the last few months. That's not been the case yet. The PMIs in the United States, not great. In Europe, pretty dreadful. This market action, though, Abby, something for everyone. Pretty bullish out there, isn't it?
It is pretty bullish, and you were mentioning earlier that last week was the best week since June. The rally continues, and interestingly, it's a defensive sector, though, that's leading today. That is healthcare up 1.5%, followed by staples. So two defensive sectors leading the way, then industrials, financials, utilities, real estate. So to your point, pretty much all sectors higher. Again, something for everybody, except consumer discretionary, down ever so slightly, and I'm guessing that is on Tesla. The last time I looked, down about 4%. But the real weakness has to do, of course, with China tech, as Ed Ludlow had outlined before. If we take a look at the Golden Dragon Index on the day, it is absolutely plunging. Its worst day ever, down 17%, going back to 2001. Its lowest level since 2013. The Hang Seng, as you know, had a bad session. Chinese tech had a horrible session, so we're really seeing that follow through today. Alibaba, one example, down 15.6%. Another interesting place that we're seeing that weakness, John, the New York FANG Index, because many of the movers in that index are also the China tech names, so lots of weakness there, and it's going to be interesting to see. We have this bullish action in the U.S., but this weakness for China. Which way will that divergence go between between the world's largest economy and the second largest economy?
It's a great question, Abby. Thank you. You see the weakness in the equity market, the weakness in the currency. The team here at Bloomberg rounding up the story. Here's one quote I'll pick out from that story for you. This from the head of investments at HB Investments. The concern is that absolute power may lead to harsh policy both locally and internationally. On a local level, zero COVID policy or tougher regulations on China tech may not go away. This individual, Sharif Faha, went on to say, on an international level, the market is definitely concerned about political tensions. And I think that was the question we all asked ourselves this morning. After the events of the weekend, does it make it more or less likely that COVID-0 continues? And most of you, I know, concluded that it makes it more likely. Coming up on this program, your trading events, your trading diary is up next. What a week ahead we've got for you, particularly on Thursday. ECB rate decision, a ton of earnings. I think we get the Credit Suisse review, strategic review as well, a little bit later this week on the same day. That's up next from New York. This is Bloomberg.
We were thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
So earlier this summer, we had a nice chat about the pivot, the pause, then it's the step down. I think we've done a step down twice already in the last couple of months. Is that an excuse or a reason for this rally? That rally continues, by the way, up another 1% on the S&P 500, off the back of a big week of gains last week on the S&P, the biggest weekly gain on the S&P going back to June. That's the equity story in the bond market, 2s, 10s and 30s shaping up as follows. Your 2-year at 20 basis point range on Friday. Ridiculous stuff. Through 460, back down to 440, right now down about a basis point to 446.18. Last week on 10s, 10-year yields closing out the week for a 12th consecutive weekly gain. Just absolutely ridiculous stuff in this bond market. That's the price action. Here's the trading diary. Your week ahead looks like this. A big week of tech earnings. You know that. Alphabet and Microsoft on Tuesday, followed by Meta and Twitter on Wednesday. Finally, results from Amazon and Apple on Thursday. What a Thursday we have for you. Claims, GDP, take your pick. ECB rate decision on Thursday. And we close out the week with the BOJ, US personal income and spending numbers, core PCE, and the UMich Consumer Sentiment Survey. Is that enough for you? From New York, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We are seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade